सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्वैता 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 एतद्वैता.
Over to Gopala Srinivas.
Yeah, good evening, members. Panelist CA Niranjan Joshi from Mumbai and respected CCM CA D Prasanna Kumar Garu and CA Cotha Srinivas and the past SIRC chairman CA Masthan and today's moderator CA Naresh Gelli and who is instrumental to this meeting, and my colleagues in the council and dear members who joined for this online program for criteria for empanelment of bank audit and CAG. A very good evening to all of you. First, I would like to appreciate the efforts made by CA Naresh Gelli Garu, Chairman PDC Committee of SIRC of ICAI, for to organize this program at this time, which is very much useful for every practicing member. This is actually earlier we were having the 1st January is the cut-off date for MEF and others, July. So every member is having, still members are having some doubts regarding what is the criteria for empanelment of both for bank audits and C&AC. I hope our panelists Niranjan Joshi and CCMs Prasanna Kumar Garu and Srinivas Garu and our Masthan will clarify all the doubts the members are having, will be clarified in this session. And once, friends, as all of us know, we are organizing our 56th regional conference at Bangalore on 9th and 10th of August. I request all the members to register in a large number and attend the program and make it a grand success. Now I request our Naresh Garu to give his introductory remarks and continue the program. Thank you very much.
Thank you, Subbarao Garu, Secretary of SIRC. Good evening to all the delegates who have joined for this session on criteria for empanelment of bank branch audit and CAG audit. Good evening to our respected Central Council members, Prasanna Kumarji and Cotha Srinivas, and also our member panelists, CA Niranjan Joshi from Mumbai, and my colleagues in the Regional Council, past Chairman Masthan and Secretary of SIRC Subbarao Garu. Members, as you're aware, our cutoff dates in terms of the institute membership is on 1st of April every year. For the 1st April 2024, we had a membership of 4,03,399, out of which 1,51,099 are the members who are in full-time practice, 2,45,158 members are with no COP, and 7,142 are the part-time membership. Out of this, again, we have about 86,982 members in South India as on 1st of April 2024. And out of this 86,982, we have about 30,699 members who are full-time COP holders in South India. And again, out of this 30,699, around 10,538 are members who are associate and 20,161 are the members who are full-time COP holders. So this is broadly the number of members across India and South India. But if you compare the membership in terms of each region-wise, Western India has about 1,32,021 members. South India has 86,982, which is number 2 in the number of members in India. And Central India has 78,017, which is number 3. North India has 77,268, which is number 4. And Eastern India has 29,109 members. This is broadly the statistics as on 1st of April 2024. And the purpose of having this session on criteria for empanelment is that we keep getting a lot of queries from members as to what would be the criteria and why they have missed any bank audit or a CAG audit. Everything is based on criteria, and since the 1st July is just few days away, and this is the period, as Secretary mentioned, it was initially 1st January to 31st January. Now this shifted to 1st July to 31st July, and this is the appropriate time that if any changes in the constitution or any queries, clarifications to be done, and also the income tax time is just around the corner, and we need to ensure that we fulfill all those criteria to be eligible for parliament. And each of these criteria are very important for us. And I'm sure our panelists would share their experiences, knowledge, and also clarify all the doubts to the extent possible. So I welcome all the speakers, panelists. To begin with, probably I will just request CA Cotha Srinivas, our Central Council member, to address for a few minutes about the number of firms in all India basis and share his views. Before I request him, I would like to very briefly introduce him. CA Cotha S. Srinivas. He's been the chairman of Bangalore branch of SIRC of ICAI, which is the biggest branch in India during the year 2009 and 10. He's been the chairman of SIRC of ICAI during the year 2017-18, and he's been elected to the Central Council of ICAI for the term 22-25, and is presently the member of Executive Committee, Examination Committee, Finance Committee of ICAI, and is the convener of at least 30 members, 30 committees of ICAI. So with this very brief profile, I would request CA Cotha Srinivas to address the members and share information about the number of firms in India and the constitution of these firms broadly. Thank you, sir.
Thank you, Naresh and Gelli. Am I audible, sir?
Yes, sir. Yes, sir.
Yeah. Thank you, first of all, SIRC for organizing this particular panel discussion. This is the very important phase of time where on 1st of July, all the firms have to fill in their multi-purpose empanelment form. I also would like to welcome my other panelists. We have my colleague in the council, CA Prasanna Kumar sir, colleague in the regional council, CA Masthan, CA Niranjan Joshi sir from Mumbai, and of course the secretary of SIRC and Naresh and Gelli sir. The first and foremost thing, you have asked me to briefly tell about the composition of the firms. We basically call this firms as a practicing unit, if I want to say as practicing unit. And you know there are 3 types of firms where you can practice as a unit. One is as a sole proprietorship, and one is as a partnership firm, and one is a limited liability partnership form of practice. So institute will not allow anybody apart from any other type of practitioners except this sole proprietorship firm, partnership firm, and limited liability partnership. He was asking us to tell about the statistics. The statistics what I have got as on May 2024, we have almost 96,656 practicing units across India. Out of this, we have sole practitioners as 3,886 numbers, and proprietorship firms as 66,174. Then we have partnership firms of 25,155, and in the form of limited liability partnerships, 1,441. Now I mentioned the 3 types of forms where chartered accountant can practice. What is this 4th one I have said? One is, I said, sole practitioners and proprietary firms. So what is this difference between sole practitioners and proprietary firms? In fact, both are independent individual practices as such, but there is a slight difference between sole practitioners and proprietary firms as such. As you know, my name is Cotha Srinivas. I can practice as sole practitioner in the name of Cotha Srinivas. If I feel that no, I should have my identity as a firm registration number, I can apply and I'll get a name called Cotha and Associates, where proprietor is Cotha Srinivas. So those individuals who have obtained this name in their in their name, so that is considered as proprietary firms. Those who don't have obtained that particular name, they'll be considered as sole practitioners as such. Earlier, if you know, many were practicing both as sole practitioners and proprietary firms. A couple of years back, there was a distinct directions from RBI that those who are having both as a proprietorship firms and sole practitioners, they will not be eligible to apply for the bank audits. So then I think I remember both from Central Council and even from the Regional Council, we or all the regional councils, we communicated to all the members and requested them to close down this sole practitioners. Many have closed down. Many have closed down. And this exercise, even last year, I think when Prasanna sir was the chairman of the PDC, we also took the list of people those who are having both sole practitioners and proprietary firms. We called them region-wise or state-wise. We did it. As of now, I don't think anybody is there who is having both and would like to apply for bank audits. These 3,886 members who are having sole practitioners, most of them they are not interested in bank audit, and they're all very senior firms. When we saw, even a couple of people when I spoke, they said no problem, Srinivas, anyway, we are not applying for bank audit, so let it continue as sole practitioners. That is without having a proprietary firm name as such. So now, as per the RBI regulations or requirements, only those firms which is having FRN, that is firm registration number, only will be eligible to apply for bank audit. So they should be either as a proprietary firms or partnership firms or limited liability partnerships. So in that sense, I said only three types of practicing members or practicing unit will be eligible to apply for bank audits. As of now, if still somebody is having both proprietary firms and sole proprietors, once again I request immediately you do that. You surrender your sole practitioners and then have only the proprietorship firms, so that when once this on the 1st of July, when this empanelment form opens, you can apply in that particular name as such. And there are many changes that is happening with respect to the bank audits. So I need not tell you what all the scope and opportunities in bank audit. Basically because of mergers and acquisition of banks, and basically because of the technology, there are there is a the bankers feel whether there is a need to audit entire branch as such. So earlier, you know, wherever the branches were there, more than 20 lakhs, 20 crores of advances that was subject to audit. Then it was converted into 90% of the advances, both funded and non-funded, to be audited. Then it came to 70%. Now, a couple of years back, it came to 50%. And RBI said the bankers can decide whether to go for 50% or more. So, but from the institute, we are putting all our efforts. In fact, we have requested all the central council central auditors of the banks, and we have said to get a proper sample as per even accounting standards, auditing standards. It should be at least minimum 70 to 74%, for which most of the central statutory auditors have accepted our request, and they also, as our professional brethren, have informed the bankers that let there be at least minimum 70% and audit to be done, both funded and non-funded. So which we have been doing, which the bankers have also accepted in the last few years. It is even though RBI said 50% of the advances should be audited, but because of the central statutory auditors, we are getting branch audits of more than 70%. So these are a few opening remarks I thought I will share with you with respect to the number of firms and all. We hope all of you who apply for this particular thing will get audits. And one more suggestion or request, all of you, this as days progress, so definitely there will be what I should say, shortage of bank branches, because demand and supply is, if you see the demand and supply, the practicing units, whatever may be the form, will be more than the number of branches to be audited. And I have come across personally in various cases in the same addresses, many people will be having three, four people of the same family having 3, 4 addresses and having other proprietary firms. Just for the purpose of bank audit, I request all of you not to do that. If you have that, kindly consolidate, because it's not just bank audit. There are so many things you can do, but you have to consolidate yourself. Maybe from proprietorship firms, you may have to get into 2 partners, 3 partners, 4 partners. We also have a separate committee in ICAI saying that aggregate of firms as such. So I request all of you, if there are opportunities, please merge yourself and grow your firm. And one more thing, from effective from 1st of April 2025, even if you are a proprietor and if you are doing a bank branch audit, your firm is subject to peer review. Please get it peer reviewed so that you will be eligible to apply for the bank audit. So thank you, Naresh sir, for giving this opportunity. And this is my opening remarks. If anything is required, definitely I'll give my thoughts afterwards. Thank you.
Thank you, Srinivas Garu. I would request you to stay back, and there are a lot of discussions which will be on the various topics of this empanelment. After request other panelists, we will definitely have a panel discussion to start off. Now, may I request CA Niranjan Joshi to address on the topic of empanelment criteria for CAG. Before I request him or hand over the proceedings to him, I would like to briefly introduce CA Niranjan Joshi. He is a Bachelor's of Commerce from University of Mumbai, and he has been a member of the institute from the year 1997. He is a diploma holder in the visa course, and also he is qualified IFRS conducted by the ICAI. In terms of professional experience, he's been in practice from 77 onwards, and his core area of practice are in the area of audit assurance of various banks, public sector undertakings, and private limited companies. He's also empaneled as a peer reviewer for peer review board at FRRB and also for the QRB of the ICAI. He's been a speaker and a trainer at various seminars and programs organized by all the regions across South, all over India, and in particular on the topics of DIRM, concurrent audit course of banks, concurrent audit course of ICAI, and also he's been contributed to the bank audit guidance note of the ICAI, and he's been writing public articles in the bank audit issues at ICAI and also at WRC newsletters, and has been a guest faculty at training center of various PSUs, institutions and banks. With this very brief profile, I would request CA Niranjan Joshi to address the members on the topic of empanelment criteria for C&D. Thank you, sir.
Thank you very much, Naresh sir, for giving me this opportunity. Respected CA Prasanna Kumar ji, Central Council member, respected Cotha Srinivas ji, Central Council member, Masthan ji, Regional Council member, and other Regional Council members and friends. It's at the right time. I think we are here to discuss on the requirements of empanelment with respect to CAG. So I thought the criteria of C&AG, I'll try to put it in a PowerPoint mode so that we can get some of the bullets. So with the permission, sir, I would just like to host it. Can I get a right to host it, please? Share screen. Sangeeta ma'am?
Yeah, sir, you can do it.
Yes, sir.
Already we have given permission, sir.
Okay,
You are
thank you.
co-host only.
Yeah, good. Thank you very much. Now, is it visible?
Yes, sir, it is visible.
Yes, sir.
Sure. So the basic criteria for empanelment starts with a policy for 24-25, which is hosted on the website of the Comptroller and Auditor General of India, and it takes you through the entire process for what is the basic requirement, and if you summarize it, it would be basic empanelment criteria divided into quantitative points and qualitative points, and some of the professional track record points. So around 13 points to be precise, and along with that, detailed guidance on how the working needs to be done. So I thought I'll just briefly give you insight about how it is working. So the points for full-time chartered accountant, partners, proprietor, maximum up to 20 is what C&AG would consider. when we are going for it. And it's part of our simple quantitative parameter, not the qualitative parameter. It would start with identifying, how many total number of partners we have, and out of which how many FCA partners we have. So we'll get 3 points for each FCA partner, and this number would be restricted to 5 partners maximum. Say, for example, if you have 6 partners and out of which 6 are FCAs, so only first 5 numbers would get maximum points, that is 3 points each. Similarly, if we have ACA partners, we'll get 2 points each, maximum up to 5 partners, and we can have maximum 20 partners. So remaining 15 partners, whether they are FCAs or they are ACAs, they'll get 50% of the points. So in short, for first 5 partners, you can get maximum 3 points each if they all are FCAs, 2 points each if they are all ACAs, and whatever numbers beyond 5 you have, you will get only half the partners, half the points for FCA 1.5 and for ACA 1 point. Similarly, we have full-time paid chartered accountant employees in our records, so we get some marks for those full-time employees as well. So we have 1 point each for 5 full-time chartered accountant employees, and then up to maximum 20 again, we have half the point for remaining 15 points. So one can assume that if you have more than 20 points, 20 chartered accountants, then you can expect 7.5 points for the last 15, and for first 5 points, so total maximum 12.5 marks. So these are the marks for your partners, proprietors, and your paid chartered accountants. There is an additional criteria in terms of partnership. Whenever you have an association which is longer than a period, then you will get some additional points. Say, for example, if you have a partner who is associated between 5 to 10 years with a firm, then you will get 1 additional point for each of the partners for this association. If you have a partner who is associated with the firm for a period of more than 10 years, then you will get 2 such points for your association with the firm. So, for example, if you are, say, individual, and if you are in practice for more than 10 years with the same name, then obviously you will get 2 points for that one individual count. If you are, say, 5 partners, and out of which 2 partners are having more than 10 years association with the firm which is empaneled, then for those 2 partners only you will get 2 points each. So maximum 4 points. Another important criteria for the experience of the firm, 0.5 points for each every calendar year, up to maximum 10 points. So here we have a limitation, like for chartered accountants, maximum 20, either partners or employees. Maximum 1 or 2 points for 5 to 10 years or about 10 years association with the firm by the partners, and overall date of establishment of the firm till the date of filing, like 25. Now we'll be doing it for 24, July 24. So we'll have 0.5 points for each completed year, maximum points 10. So this is the starting criteria for understanding where we stand when it comes to C&AG. The next criteria is a qualitative parameter, which starts with primarily the peer review, which is added last year. A firm peer reviewed by ICAI, we can get maximum 25 points. And if you see the numbers, it would add up 5, 4, 4, 3, 3, 2, 2, 1, 1, based on the number of years in last, 20 years, you will be covered by peer review. So for the 25, if it's covered, you will get 24. If it is covered, you will get 5 points. Then 4 points for 23, 4 points for 22, 3 points for 21, so on and so forth, and you go backwards. So the idea is that there should be a continuity in having a firm peer reviewed. And we just got to know some interesting numbers. We have got around 96,000 practice units. And I think those who want to get empaneled themselves need to have a latest peer review being carried out to get maximum points. Apart from that, there would be points for audit experience, where we can get maximum 40 points. Those audit experience points of 40 are split into 3 categories. First is for statutory audit of corporate entities. There are 20 marks maximum allocated for an empaneled firm. For statutory audit of branches, maximum 5 points are allocated. And for internal audit experience, maximum 5 points are being allocated. Initially, these points were for number of corporate entities based on their turnover, etc., and we had to file the information. But if you look at that, basic advisory, you would find that you will have covered based on a number of maximum number of audit clients given by an empaneled firm, and then we will work out on a quotient, and based on the quotient, we will get points. Also, we have got 5 points for audit of government scheme, maximum up to 5. And the scoring pattern would be, first thing is that they would collect the data for all empaneled firms. And based on all empaneled firms data, they will first put a score of maximum points by a firm, and then discount it for the remainder. Say, for example, in case of statutory audit of corporates, if you have, say, maximum 20 points, and if somebody gets, say, 200 points, then the quotient would be 1 by 10, because 200 would be compared with 20. So based on that particular quotient, the numbers would be discounted for all other empaneled entities. And based on that, each one would be given a score, and that score would be available for all of us once we submit the form. The detailed marking system, I think we can see in the next slide. Also, the quantitative parameters have got one more thing, points for qualification of full-time CA partners. Qualification in the sense of some additional courses or diploma courses offered by ICAI, or to some extent some well-recognized courses such as CISA or CAP or CPA from recognized universities. So the points are like, again, the limit is maximum 20. For a partner who is qualified CISA or DISA or CPA or CIA or CAP, we get 1.25 points for each partner. Or any other ICAI certificate course, we get 1 point each. And for full-time chartered accountants also, if that full-time chartered accountant is either CISA, DISA, CPA, or CIA or CAP, they'll get 1 point each. Now here, the trick is, like, if, say, for example, I am getting empaneled myself, and I've got maybe more than one certificates like CISA or DISA both together, or CISA or CAP, or ISA or CAP, then I will not get 1.25 points for each certificate. Only one person, one course, 1.25. That's how the marks will go. Same is in case with the chartered accountant employees, Like if I have done CISA or DISA, only 1 point for one certificate for one employee would be available. Now coming to certificate courses, like certificate course on concurrent audit and various certificate courses are available. And if I have also done DISA, then I will not get 1.25 plus 1 point. I'll get only one where I wish to get, and there naturally I would prefer to get 1.25 points over 1 point. So the main point here is the qualifications are available on that list, and we need to ensure that each partner has got at least one such qualification which would ultimately qualify for this qualitative parameters. So the first phase of qualitative parameters defined are, one is related to peer review, one is related to technical educational qualification of members, and one is related to our audit experience. Now, to understand more on audit experience, we can just have a look at the table which is given in their 24-25 empanelment criteria. The marks would be awarded like this: somewhere around statutory audit corporates, where turnover is above 40 crores but less than 100 crores. We have assigned 3 points each. For turnover above 100 crore but less than or equal to 250 crores, we have been assigned 4 points for that particular assignment. And turnover above 250 crores is 5 points. So technically, when we assign this and we identify, we believe that we get 20 marks even if we have around 2 companies in each of these segments. But the catch is the last 2 lines. There it has been clearly mentioned that maximum points scored by any firm, LLP, in each of the above 4 categories will be equated to the maximum points stipulated for the respective category, and points scored by other firms will be discounted accordingly. So in a simple example, say if our points comes to 20 in this first category of statutory audit corporate, and somebody else who is also empaneled has got a point score of around, say, 200, then they are 10 times of us. So the quotient would be 1/10. And obviously for 20 points, even if we believe we have scored, actual points we will get is 20 divided by 10. So we'll get only 2 points when the final mark list would come. The same thing would apply to the second category, statutory audit branches, where turnover above 40 crores up to 60 crores, we have got a 1 pointer. Turnover above 60 crores but less than or equal to 100 crore, we have a 2 points. And turnover above 100 crore but less than or equal to 250 crore, we have got 3 points. And branch audit where turnover is above 250 crores, we get 4 points. Again, here the maximum points I could reach is 10. And this 10 is again based on the total quotient of the maximum numbers scored by any of the empaneled firm. There are 2 more segments. One is internal audit and one is government scheme. There we can score maximum 5 points and 2 points for each assignment. Here the challenge is all these starting point is the turnover is above 40 crores. So we have to ensure that whenever we are signing anything, whenever we are issuing audit report and whenever we are generating a UD, we should simultaneously prepare a proper data about name of the company, name of the auditor, unit number, and the criteria for turnover, so that when we have to fill this information in our empanelment form, we need to check this. Again, there is a footnote there which says that at present, the points will be awarded based on UDIN numbers generated between 2021, 21, 22, 22, 23, and 24, 25 onwards. It would be scaled up to the period of maximum 5 years, gradually at the end of 26, 27. So naturally, this experience will be counted based on last 5 years data from UDIN, which is captured from ICAI portal. So whenever we are preparing for a empanelment data, we need to ensure that we should against each type of experience in this particular 4 types of audits, we should identify UDIN numbers properly and ensure that our data is being captured correctly for all 40 crores and above and other segments. Coming to the last portion of the qualitative parameter is like deductions. Till a few years back, there were no deductions and only points were counted, but gradually they have improved on deductions on account of basically 5 items. First is the unsatisfactory performance advisory issued. They will deduct 10% of total points earned by the practice unit, which is applying for the empanelment. They will deduct 10% of the total points if CA firm or any partner has been held guilty of professional misconduct by ICAI, and this penalty is for 10% of total points per partner. So if you have 1, 2, or 3 partners and only one partner is being held guilty, then it would be restricted to 10% of total points. If there are more number of partners, then it would be in multiplicity of that 10%. Third is non-technical refusal. There would be 10% total points. This would be particularly like unsatisfactory performance advisory is generally issued by the CAG team, which carries out the supplementary audit, and based on that, if they issue any unsatisfactory performance advisory. Non-technical refusal would be on the basis of refusal done by a CA firm when they are being appointed for auditing any public sector undertaking, and without specifying any reasons or technical requirements. So if they refuse it, then 10% of the points would be deducted in your next empanelment cycle. If it is reprimand by QRB, advisory is being issued by the Quality Review Board, 10% of total points are deducted of the firm. And if it is reprimand by NAFRA or any advisory issued with regard to that, 10% of the total points would be reduced. So once we make the total of all these points, at the end, there would be deductions on account of these 5. And obviously, this data has been captured from those respective agencies as well as on your self-declaration basis. The second part of the advisory talks about allotment of audits, like selection of firm, LLP for major audit fees and minor audit fees. So more than 5 lakhs is considered as major audit fees, and less than 5 lakhs is considered as minor audit fees. Selection of the firm for audit fee up to 5 lakhs is purely based on correlating the point score of each firm or LLP with the audit fee of the unit. And then based on that, the allotment is generally being done by the CAG office. For more than 5 lakhs, the major audit criteria, there are 3 or 4 criteria which they have defined, and that would be considered. The first criteria for that would be firm should have at least 6 full-time chartered accountants, with, out of which minimum 5 should be partners and 1 should be a full-time paid chartered accountant. So for being eligible for public sector undertaking audits, which are called as major audits, you should have at least 6 chartered accountants with 5 of them to be partners, and 1 should be a full-time paid chartered accountant. Out of these, 1 partner should be at least having more than 10 years association with the firm. 3 partners should have at least 5 to 10 years association with the firm, and 2 partners should be having at least more than 1 year's association for the firm. So if you add this up, total 6 numbers could come only if they are having more than 1 year's experience. So by and large, the bottom line for our CAG empanelment status is that somebody who has joined us as a partner or somebody who has joined a firm as an employee, for the first 1 completed year, there will not be any point considered. And for any partner or a proprietor or even individual, after 1 year only, the points would start counting. Now, the date here would be cutoff date crucial. Like till last year, we had an excellent 1st January date for good number of years. So we were very clear about it. And right now, all of us have reiterated this point that it would be July now. So all of us should be very clear about on 1st July what would be our stand. Another requirement, which is a technical requirement, is 1 CISA or DISA partner minimum required. Another expectation is that you should have at least 5 years audit assigned by C and AG, and then correlation to points scored, because the number of audits are less and number of empaneled chartered accountants are more. So obviously, this would come into picture. Now, the definition of full-time partner says that full-time partner does not include a person who is a partner or proprietor in other firm or employed somewhere practicing in own name. So exclusive association with the firm, either as a partner or as a paid employee, is something which is very crucial. Like there are typical issues, which comes in our notice. Like Cotha sir initially pointed it out. Like we have some individuals who are practicing in individual names, and they are also, proprietors now. So once you apply for a proprietorship, you should ensure that your CFP.
Good evening.
Yes, anything? Any question?
So, No, by mistake, somebody spoke. So
by mistake. Okay, sir. Thank you, sir. So, if you are an exclusive partner or an exclusive paid employee, then only these benefits would be accrued to you. So, a full-time partner will not be considered if he's partner or proprietor in another firm, or he is employed somewhere or practicing in own name. This is a simple exclusivity criteria, but there are 2 more criteria. The first one is having a particular compensation for a particular year. Like when we are applying for 24-25, when we are filing the return, we should ensure that if we are in the city like Delhi, Mumbai, Chennai, Kolkata, Bangalore, or Hyderabad, we should have minimum 6 lakhs compensation from the firm for a partner who is a FCA, and minimum 3,60,000 compensation if there's a partner who is an ACA. And for all other cities, the partners drawing compensation should have minimum 3.60 lakhs in case of an FCA or 2.40 lakhs in case of an ACA. And any partner who is drawing below this threshold from the firm, then that partner will not be considered as a full-time partner. And obviously, the marks or the points which are allocated to those partners will not be considered while arriving at the full points for the firm. Now, in case the partner's percentage is also linked, like if there is a total compensation, like profit plus partner salary plus interest paid to partners, that total amount, in case of more than 14 partners, it should not be less than 1% of that total amount. In case of 10 to 14 partners, it should not be less than 3% of the total compensation. And in case of 5 to 9 partners, it should not be less than 5% of the total compensation paid. Those partnership firms and individuals below 5 partners, it should not go below 8%. So technically, for compensation, that is including salary of the partners, profit of the partners, and interest on capital, The threshold limit is it should not be below 360 or 6 in case of AC and FCA. In case of cities like Delhi, Mumbai, Chennai, Kolkata, Bangalore, and Hyderabad. And in case of other cities, it is 3.60 lakhs for FCS or ACS 2.40 lakhs. That's the single standalone condition. Overall, that should not be less than 1%, 3%, 5%, and 8% of the total composition or total compensation paid to all the partners put together. In case of more than 14 partners, more than 10, but less than 14 partners, 5 to 9 partners, and less than 5 partners. Also, there is one more condition, and that's the reason you will see in MEF as well as in CAG data, we have to give additional income details of the partners, So wherever there is a permitted income by ICAI, that doesn't mind. But if it is other income which is other than permitted by ICAI, which is more than the professional income, then that such partner is also not considered as a full-time practicing chartered accountant because his other income or her other income is much more than that income. So you have to also go through the ICAI guidelines on what is eligible income, what is permitted income, along with our practice area. So full-time CA employee does not include CA who is partner in other firm or sole proprietor. Partner or paid chartered accountant will get points only on exclusive association. Additional considerations would be on case of mergers like IC.
Yes, Niranjan,
Sir,
sir.
please unmute yourself. Sir. Niranjanji, you are muted. Ah, okay.
Okay.
Now it's okay.
Now is it fine? Okay. So as I said, for a chartered accountant employee as well as a partner, exclusive association is something which is very, very important. In case of a merger also, like there are lots of people who are now interested in becoming large size partnership firms. Aggregation is a need of the time. But at the same time, for empanelment in C&AG, the condition for merger firms is very clearly defined. Points will be allotted to partners after 1 calendar year, which is common in case of a normal addition of a partner or normal addition of a paid CA employee as well, unless on a reporting date, that would be now 1st July. If they have not completed 1 year, they will not get full points. Once they are completing 1 year point, then they will start getting or accruing points. And in case of earlier association, like seniority of that firm, seniority of that member, seniority from the first date when the FCA partner was there, all that would be considered only after completion of 5 calendar years. So if somebody does a merger in 2024, then they'll have to wait for 5 years to get the full benefit of mergers in terms of points, as we discussed in the previous 8 slides, would be considered. Now, points for turnover is the last thing I think given in the circular. Up to, like again, same distinction between the cities like Delhi, Mumbai, Chennai, Kolkata, Bangalore, and Hyderabad. We have got a limit of 1 crore, 2 crores, 3 crores, 4 crores, 5 crores. And for cities which are other than these, the turnover criteria is up to 0.60 crores, up to 0.120 crores, 1.80, 2.40, 3, and 3.60 crores. And for each slab, the point goes on incrementing. Like up to 1 crore in metros, you will have 0 points. Then 1 point each for every incremental 1 crore rupee. And in case of other cities, for every incremental 60 lakhs rupees, there is an additional point. And here also the cap is maximum 5 points. And all this would be plotted once we, put it on the screen. It will be thrown open to us, and we can download that points which we have scored from the empanelment based on this C&AG criteria. I think that brings me to the last slide, and I give it back to the organizers.
Thank you very much, sir. You have taken a detailed presentation on the empanelment criteria for CAG. We will definitely have a discussion on these points with the queries from members. So I now request CAD Prasanna Kumar Garu to address the members on the bank branch audit criteria. And before I hand over the proceedings to him, I would like to briefly introduce CAD Prasanna Kumar.
In off
He is a
minute.
qualified chartered accountant in the year 1984 and is a fellow member since then. He's been the chairman of Visakhapatnam branch of SIRC ICAI during the year 2001 and 2. And during his tenure, the branch won the award, Best Branch Award, for the first time. He got elected to SIRC 3 times, and during the year 2013-14, he was the chairman of SIRC. And during his tenure as the chairman of SIRC, the Southern region got highly commended performance award from ICAI. He got elected to Central Council for the terms 2019-22 and 22-25. He is presently the chairman of Peer Review Board for the year 24-25 and is a member of at least 30 committees. With this very brief profile, I now request CAD Prasanna Kumar garu to address the members. Thank you.
Yeah. Okay. Respected CA Cotha Srinivas, Central Council member, and CA Mopal Subbarao, the Secretary of SIRC ICAI, CA Masthan, the past chairman of SIRC ICAI, CA Niranjan Joshi, a renowned resource person in ICAI, is a person who's contributed selflessly for the profession, and CA Naresh Chandra Gelli, the chairman of the Professional Development Committee of SIRC ICAI. So, my dear participants in the program, good evening to all of you. So we heard two of the panelists today. That is CA Cotha Srinivas. He has given a overview and certain items which have got some concern with the empanelment. When we came to CA Niranjan Joshi, he made a very detailed presentation. Presentation, one part of the story, and the way in which he put up the slides is fantastic. I think this should be shared with the CNDG also. So I'll take this and share it to CNDG. It will be easy for them to see in a nutshell. He has kept everything very nicely. And with his permission, we'll share with them. And we will also use it as and when it's required. Thank you. Very lucidly presented. Very nice.
Sir, I have already sent a mail to SIRC. They can send it to you all, sir, please.
Okay. Good. It will be very useful. I think we'll circulate. We'll do good exercise in that. It will be circulated to many people now. Great. Friends, see, I've been asked to just introduce various salient features about empanelment for the bank branch audit. So, as you're aware, I'll just talk about the categories. The basic thing is categorization of all the firms. So we've got four categories: Category 1, Category 2, Category 3, and Category 4. And subcategories are there in Category 4. So these are all the categories as prescribed by Reserve Bank of India. Before I just dwell upon the nuances with respect to this categorization, I'll just take you to, there's a mention by a couple of the speakers earlier that, the cutoff date has been changed from 1st January to 1st July. This happened in the year 2023. There are many members, they keep asking that either you make CNDG 1st January, CNDG cutoff is 1st January, and for a Reserve Bank of India, it is 1st July. Either make both the things in 1st July or both the things 1st January. This is what members think. So members, we should understand that CNDG criteria is very much required on 1st January because after 1st January means effectively it is 31st January. Any changes in the form which have been made up to 31st December without any penal provisions, so you can furnish an SSP before 31st of January. So that's why literally 1 month is gone there. And for empanelment and other evaluation and all those, it takes 3-4 months for them. Whereas by off year, the first off year, so there's the second quarter, they have to make the appointments for all the public sector undertakings. Hence, if you put the 1st July, it's very difficult for them to adhere to that particular date. Hence, 1st January will continue to be there as far as CNDG is concerned. Then let's come to bank branch audit. If there is a 1st January, 1st July, may not make much difference for that. The only point here is, first I'll tell you why it was changed. Last year, the criteria for bank branch audit empanelment has been changed by Reserve Bank of India by virtue of a circular dated 8th March 2023. The cutoff date for the empanelment is 1st January. 1st January, literally, any changes, they can make it in SSP up to 31st January. So after 31st January, cutoff date is over. Then on the month of March 8th, new criteria has come. So now, those members who could not plan about this particular change of criteria, all of them will be ineligible. We found there should have been at least some 6 to 7,000 firms who should have been ineligible had we continued 1st January cutoff date. That is the reason why we convinced, we had a meeting with Reserve Bank of India and got it changed to 1st July, so that the members had enough time to convert into from the proprietary concern or sole practice into the proprietary concern, or and employees also, to plan those employees who are left can be replaced with some new employees. All those things were there for the purpose of giving the benefit to the members who are otherwise should have become ineligible. That is the reason we have changed it. Having changed that, there are some other benefits also. Suppose 1st January, if you take the cutoff date for the audit year, which is the audit year, audit is the next year, you are going to be appointed in the month of March following year. So there's a gap of clearly the more or less the 12 months gap, 15 months gap is there between 1st January and 31st March. Suppose you make it 1st July, whatever the changes that have taken place in the first 6 months of the year also can be taken. Otherwise, the credit for such additions or qualifications shouldn't have been given. And whoever is left, all negative points are considered. Or the cut-off date, any partner leaves or something else happens, whatever it is, they are giving effect to. So for this limited purpose of helping the members in practice, for the purpose of empanelment, this particular criteria, the cut-off date has been changed. That's the background I just want to bring to your notice. Now, we'll come to the categories. So now it has been displayed. You can see on the screen. So this is Reserve Bank of India circular dated 8th March 2023. For category, if you see, I'll start with category 4. Let us say category 4 first. Category 4, there are partnership firms, there are proprietary concerns, and another category proprietary concerns. Now, if it's a partnership firm, if two partners, we are all aware, if partnership firm, minimum 2 partnerships are there. If 2 partners are there, and there are 2 staff members are there, no bank audit experience is required, automatically they'll become, with 3 years of standing, they're eligible to be category 4. See, the criteria is number of chartered accountants in the firm, number of partners among the chartered accountants, and the strength of the staff, and experience, bank audit experience. And the last point is standing of the firm. These are all the criteria which determines to which category you belong to. As I told, partnership firm, 2 partners, and 3 years of standing. Automatically, with or without any experience, so you will become eligible for a bank audit. Now let us come to proprietary concern. There are 2 categories of proprietary concerns. One category is there are 2 chartered. That is, proprietary means only one proprietor. 1 proprietor plus 1 paid employee. 1 proprietor and 1 paid employee are there, and without any bank audit experience, with the standing of 6 years. With the standing of 6 years, they will be categorized as category 4. Then I'll come to the next category of proprietary concern. If there is only 1 proprietor, no bank employee, no paid assistant is there, no paid CA is there, and those circumstances, my dear friends, you see, the 1 partner, that is 1 proprietor, and 3 years of bank audit experience. You should have minimum 3 years of bank audit experience and 6 years of standing. 6 years of standing is there for both proprietors, with employee or without employee also. But this 3 years of audit experience is specially given only when there's a proprietor and without any employee. So members always put a question. No, I too can put that question. I too got a question. See, here, unless you get a bank audit allotment, you will get experience. And this criteria says, unless you have got experience, you will not be empaneled. It's a vicious circle. How does it happen? Okay. Here, my dear friends, this is not something which is not discussed with the Reserve Bank of India. There's a rationale behind this. The rationale is, if you apply the new criteria without this particular category, what will happen? There are more than 10,000 firms who have got experience of 30 years, 10 years, 15 years like that. All of them, unless they have 1 more paid employee, they all become ineligible. They are the ones not newly, those who come to newly practicing newly. But this is a criteria where they have got already experience of more than 3 years, they have got a standing of 6 years because they have got 30, 40 years experience, still continue the proprietary concern. Or sole practice converted to proprietary concern. Under those circumstances, all of them become ineligible. Just to regularize that as a transition, we call it a transitional provision. That is the reason this particular clause has been put. All of them, even if they are only one proprietor, there's only one proprietor without any employee. They have more than 3 years of experience, 6 years of standing, they got eligibility. It's not for the purpose of those who are coming into practice newly. Those who are coming into practice newly, the criteria is there's at least one paid employee with them, CA paid employee, then without experience also after 6 years they get it. Or they should have 2 partners form. So these are the criteria. When I explained about this particular proprietary category 4, we should also get a doubt. What is this experience in bank audit is about? Bank audit experience is the experience of a bank branch audit, either in a public sector bank or in a private sector bank. Both are acceptable. May not be cooperative banks. These 2 are acceptable. Then, what is the experience about? The experience of the chartered accountant or experience of the partner is considered if he has conducted the bank audit. Is not necessary he should be a signatory. Suppose there are 5 partners, all the 5 partners go for conducting bank audit. That means all the 5 have conducted the bank audit and they have got experience of 1 year. One audit, 1 year. Suppose the same year they do multiple audits, multiple bank, it will be considered 1 year experience only. So this is the experience part. And if the partner is there, only one partner, he signs that one, then he will also be treated at par with the partner who has conducted the audit. This is one clarification. If the proprietor, no doubt at all. Proprietor is the person who conducts it, who signs it, signs the report also. So this is the about the experience. Suppose firm experience also considered. Suppose the firm is executed, conducted the audit for 3 years, 4 years, 8 years, as the case may be, as per the criteria. And that is not partner specific, that is firm specific. Whether that partner may continue or not, if they have conducted the audit, the firm, by signing in the name of the firm, either a proprietary firm or a partnership firm, they will be considered each year, will be considered 1 year of experience. This is the clarification regarding bank audit experience. Then let us come to standing of the firm. If you take the standing, if you take category 4, you see, category 4, partnership firm, 3 years stand. That means, category 4, the moment you constitute a partnership firm, from that date, you should have 3 years of standing. That is date of constitution is very, very important here. From that date, it has got nothing to do with any other criteria. Similarly, a proprietary concern where one employee is there, that is also the constitution of proprietary concern is important there. And so 6 years standing. But when you come to category 3 and 2, there is category 2 and 3 is slightly different. Here, the standing is standing of the firm, 6 years standing or the 5 years standing respectively, for category 2 and 3 will be considered for the firm or one partner. The firm has got, for category 2, there's a partnership for 2 partners. Even if one partner has got 6 years of standing, that standing will be considered as if it is standing for the partnership firm also. Similarly, for category 3 also, if 2 partners are there, even if one partner has got 5 years of standing, and the 5 years of standing will be considered for the purpose of firm. So this is the meaning of standing of the firm as per category 2 and 3 is concerned. Category 1 also is only date of constitution. This exemption is given only for category 2 and 3. For the category 1 and category 4, it is the date of constitution or date of the certificate of practice in case of property concerns. So these are the criteria as far as standing is concerned. Staff, you are aware, article students also will be considered staff. And as far as, clerks and, typists, and those persons will not be considered. They should have something about, some knowledge about the bookkeeping work. So, and who conduct the audit. Only such people consider staff members. That's okay. Then comes, what is the difference? You come to second column. Second and third column, the little application of mind is required here. First column, the second column says about number of chartered accountants. Third column talks about number of partners. Proprietor, no issue at all. No issue. I'm talking only partnership firms. That means, suppose category 1, 5 partners, 5 chartered accountants should be there. Out of the 5, 3 should be partners. That means you can have 2 paid employees also. All 5 can be partners, no issue at all. If 3 partners are there, as per partnership deed, and only 2 of them are 2, other than the 3, 2 are paid employees. As per the institute records, paid employee does not mean that you're a paid employee and you're paying salary and all. No, that should be as per the records of the institute. It should have been recorded the SSP. Then only they'll be considered as a chartered accountant employee. So these are the difference between number of chartered accountants and the number of partners. And the last point here is exclusive association. This is a very major issue. Exclusive also. What is exclusive association? See, Niranjan Joshi has already explained regarding association, exclusive association in C&A empanelment also. Here, exclusive association means that particular chartered accountant should not be a partner with any other partnership firm. And he should not be have, like Cotha Srinivas said, he should not have individual practice and multiple proprietary concerns. As per the regulation, my dear friends, you can practice as individual, one type of practice. You can practice as a proprietary, you can have multiple proprietary concerns. And you can be partner in multiple partnership firms. The number go up to 100, 200, whatever the N number, it can go. And you'll be considered exclusive association if you are connected, if you are associated with as a proprietary with that proprietary concern alone, if you're a partner with that particular partnership alone, not multiple. Okay. So as far as this is concerned, you should be associated with only one type of practice, either individual or proprietor, or no, individual is not eligible now, proprietary concern or a partnership firm only. Then only you're eligible. Otherwise, you will not be treated as you will be treated as non-exclusive chartered account, non-exclusive partner, and you will not be given any credit. The second thing is, suppose one chartered accountant is a partner in 2 partnership firms, A and Co, B and Co, let us say C and Co, also 3 partnership firms. All 3 of them make an application to the MEF PDC for the multi-purpose empanelment purposes. Because there's a common partner in all the 3, A and Co, B and Co, C and Co, they will not be considered. All 3 of them were rejected. In case there's an option given to them, in case they withdraw, in the given example, 2 of the firms withdraw the application which was made for MEF purposes, the firm which is continuing will be considered without giving any credit to such common partner. So these are all about the exclusive association. Okay. So as far as proprietors are concerned, so though the proprietary concern should have been, proprietary firm should have been established very recently, if such proprietor was into practice earlier also, the date of certificate of practice, the date of certificate of practice issued, that date will be reckoned for the purpose of standing. So this is what I want to tell you. And then before we go into other aspects, I'll just close my preliminary remarks with only one item. That number of applications for MEF last year were, and for the year 23-24 audit were, just 1 minute. There's some disturbance here. I'll just come back. Just 1 minute. Somebody's talking.
Dear members, can I request all of you to please mute your mic, please?
Yeah, I was also muted. I'm back in the meeting now. So the little statistics about the MEF. For the audit year 23-24, the total number of firms which have been empaneled eligible were 30,150, say 30,000. Out of that, category 1 are close to 2,500, category 2, 4,000 plus, and category 4, 6,000 plus, and category 4, 70,000. This is the breakup of all the 30,000. So last year, like Cotha Srinivas said, when the new criteria has come, we have been so liberal. Whenever even those who are converted from the sole practice or individual practice into proprietary concerns, as late as the month of January, they have been considered. Even we went to Reserve Bank and said, though the cutoff date is something else, because it's transitional year, our members should not lose the opportunity of getting empaneled. And they also considered in the month of January also. So were considered and we spoken, like you said, we have written emails, we sent messages, and telephone calls were also made to convert into the property accounts to be eligible. So these are statistics. And out of these 30,000, how many have been engaged as an auditors for the year 23-24? Out of the 30,000 eligible, there are close to little more than 13,000. 13,000 were appointed bank branch auditors, little more than 13,000. That means almost, so 1:1 ratio. So after every two chartered accounts eligible, at least one is appointed, almost. So some people say, we are not getting bank audit, why we should do it? It's not such question. 50%, more or less 50% of auditors are getting a bank project audit, even the present criteria also. So these are all the things I just want to tell you. And as far as coverage is concerned, my dear friends, you can note that, once upon a time, it was 90% coverage of advance was there. Then it was reduced to 80, then 70. 70 was the last item. Reserve Bank of India, 70% minimum advances are either fund-based or non-fund-based should be covered. That's what Reserve Bank has said. Later on, they deregulated. They gave that particular power to the respective boards to decide what should be the coverage. So then, it was discussed multiple times. Although we had a special meetings with all statutory central auditors, they also took up the matter with respect to management. And now, more or less all the banks, there's no bank which is having coverage less than 70%. There's no bank. And there are some banks, like Bank of India, for example, as far as my knowledge goes, they're covering even today 80, 82%, more than 80% they're giving the coverage. Some banks are 75%, some are 70%, but not less than 70%. So the coverage is that. And there was also discussion, less than 70% coverage. Statutory central auditors were not comfortable to give a clean report. They are not comfortable. That also has been communicated to the respective management so that they thought that 70% still continued by many of the banks, which is there in the public domain of all the banks also. Then there's a discussion of the cooling period. There's no cooling period. Everyone is telling that cooling period should be reinstated so that the person who's getting the audit should not get continuously, term after term. After every term of 4 years, there should be some gap should be there. 1 year, 2 years, like that. Earlier was 2 years. That should continue. Someone made a representation to Reserve Bank of India. They are not inclined to do that one. They said no cooling as long as the auditor is eligible. As long as we get an eligible audit to conduct the audit, we're happy. We don't want any cooling. Even some audit is getting continuously also. We don't issue. Our idea is to have a qualified auditor, not beyond that. Eligible auditor. That's what they said. However, efforts are still on. I understand the present chairman of the Professional Development Committee also had a meeting with Reserve Bank of India, insisting that the old scheme of cooling period should be brought back. Let us wait and see what is going to happen for that. And I know that there are also some members who are telling, I'm appointed for 4 years because they have taken a consent. Banks have taken a consent for the period of 4 years. So they're given an audit only for 2 years. Thereafter, they are not given. There's no system of that kind. Once appointed, you're appointed for 4 years. But that appointment is subject to a condition that every year in the MEF, you should be eligible. If you're eligible last year, you conduct the audit, next year become eligible due to whatever the criteria it is, then you will not get the audit. So that is the criteria. But however, there's one clause here. Suppose you're appointed for 4 years and 2 years audit is completed, you're left with 2 more years. In the 3rd year, you became ineligible. You did not get the audit. And again, the very next year, you become eligible. Next year, the 2 years of the balance period in that particular bank will be considered and you'll be appointed as an auditor for the balance period of 2 years. This was also not that earlier. We made a representation to Reserve Bank of India because there's many firms because the standing as per new criteria, they had all eligibility, but standing 1 year standing was, let us say 6 years standing is required. They had only 5 years standing. They were already auditors with the earlier criteria. We convinced the Reserve Bank of India. They said if they become eligible next year, and that balance period of the 4 years period for 4-year term will be considered by the same bank. This is what is the present system. Those who could not get it, don't. If you become eligible, you will get the balance period also. And selection of the auditors. Selection of the auditors, dear friends. Suppose district, most of the banks are taking the district as a criteria. There are some banks who do not have the criteria, the details of the number of branches to be audited district-wise, category-wise. They may know that so-and-so district, so, Visakhapatnam district, there are 100 branches to be audited. They know. But within the 100, how many branches require category 4 auditors? How many require category 3 auditors? 2 and 1, as the case may be. That data is not available. In the absence of that, they are not taking district as a criteria. They take state as a criteria, or the regional office as a criteria, like there are some banks. But most of the banks, including the software which is given by the Institute of Chartered Accountants of India, is also takes only district as a criteria. Suppose in one particular district, Hassan district, so they want 10 chartered accountants to be 10 auditors are required in category 4 for that particular bank in that particular district. And if 10 are there, they'll pick up all 10. No problem at all. If 8 are there, they'll pick up all the 8. If 15 auditors are there, but 10 is the requirement, then most of the banks, I think almost all the banks, they go to the criteria, it's a process of random selection. Random selection is nothing but, in the colloquial language, if I have to say, is nothing but a lottery system. They'll pick up any 10 out of the 15. That 10 will pick up by the computer. Computer is random sample, software is there, it will pick up. So that's how it is done. And I think regarding peer review, I want to tell, I think it has been made clear also that if you want to have a bank branch audit, to be eligible to conduct a bank, or not only to be eligible, to accept the appointment and to conduct the audit and sign, in the entire period, your form should be peer reviewed. For any bank branch audit, public sector bank, not private sector bank, public sector bank branch audit by 31st March 2025 for the next year audit, for the year audit year 24-25. Even you may be a continuing auditor. Maybe the 4-year term is not over, 3 years are left, 2 years are left, 1 year is left, whatever it is. To be eligible, you should be peer reviewed by 31st March 2025. So please note and wake up early. Don't wait till the last minute. Last minute rush will be there always, as you are aware. So that time we should not, even the institute cannot increase their bandwidth suddenly for the to cater the needs of the highly rush in the last minute. So everyone has a limitation. So spread it over now. We start making an application for the peer review right now. So these are things, friends, I just want to bring to your notice. And with the permission of Mr. Naresh, I just did the last 2 items also. There is no changes in the MEF multi-purpose empanelment form the current year, except that we have included 2 more criteria of the additional data. What we take additional data, where the revenue audit and ASM audit. These 2 things have been included in 2 line items. There are already 4 line items. 2 more line items have been getting added in the present in the new review form. And there's one I think which always is talked about by CA Masthan. Masthan is the only person probably who knows this particular item. Most of us do not know. That is, if you've got employees as of 1st July, as a present cutoff date, paid employees, 3 employees are there. All 3 of them leave in the month of September. 1st July, I got 3 employees. 1st September, all the employees leave. Then it becomes 0. Suppose in the month of, if not September, October, you employ 3 more persons. Those 3 will be considered. The person is not continuing. The only the count which is enough. If the count is there, we used to consider. This has been going on for quite some time. It has been deliberated multiple times in the Professional Development Committee. A recent decision was taken that unless the employees who are there on the rolls of that particular firm as of 1st July continue up to the 2nd date of verification, they will not be considered. Their replacement will not be considered. So that is a new guidance which has been brought, which will be communicated to all the members also. So these are the things I just want to tell you. Rest of things, as and when the queries come, we'll take it up. I want to speak to you regarding verification of financial documents. Anyway, whenever the queries come, we'll do it. And I think the chat box is also full with so many queries. Now over to Naresh for further proceedings. Thank you so much.
Thank you, CA Prasanna Garu, for making a detailed presentation on criteria for bank branch audit and also the condition of peer review from 1st of April 2025. Now, I would request CA Srinivas, past chairman of SIRC of ICAI, to share his views, please.
Very good evening to members. Hope my voice very clear. Somebody can
Excellent.
Right.
Yeah, very clear, very clear.
Yes, yes.
Right. Respected Central Council members, Prasanna Kumar sir and the Cotha Srinivas and the panelists and the well-known speaker, Niranjan Joshi, and the office bearers of SIRC, the secretary especially who gave the inaugural address, Suparao Garu, and the other office bearers and the regional council colleagues, and my young members and the senior members who joined for on this topic. Once again, very good evening to all of you. I'm so happy to share some of the issues where the members generally face in filling the MEF and where the members having the problems to complete the MEF criteria and especially regarding to the categories. Even that the Honorable Central Council member has covered this cut-off dates. Yes, I agree fully with the Prasanna sir. What background? The 1st January has becomes the 1st July cut-off date. Yes, because of that RBI notification. And members, this 1st July for the empanelment 24-25, that means 25 bank audit. The cut-off date is 1st July. But still we have a time for 30 days to make all the changes in the SSP. That means technically you have the time 29th or 30th of July. Maybe you can change the address, add the partner, remove the partner, whatever the changes required. That is the 30 days time. And after this, once making the cut-off date time means 30 days over from the 1st July. This data from SSP will capture the institute and kept in MEF website, MEF website. I think this both will not related to SSP and the MEF website. So before the cut-off dates means 29th or 30th July, make all the changes. And if any member wants make the subsequent dates, making say as a condonation delay. Yes, absolutely SSP will accept all the condonation delays, but for empanelment purpose will not consider. That means whatever the changes from our member or partner are expecting, make the within the due days, any condonation will not be valid for empanelment purpose, especially for the MEA purpose. Am I right, Prasanna sir?
Yes, you're right. 100% you're right.
Yes. This is the most important. This is the one. And why? What the second cut-off date in the closing remarks, Prasanna sir said, the another cut-off date also is there. Generally, the cut-off date, the 1st July, the second cut-off date is usually 1st November or sometimes 1st December. 1st December. That means whatever the data as on 1st July should be the same on 1st December also. That means if you have the 3 partners on 1st July, the same 3 partners should be continue up to 1st December also. Then only your category will be the same. Suppose if you have the 3 partners, while applying that in the month of August or September, whatever the date, you will get the category 2. If any partner left out of these 3 before 1st December, then your category will be. Can you unmute to everyone, please?
Sir, we did it.
Okay, thank you. So before the 1st December, if any partner left, then automatically your category will be downgraded on second verification. So that the same membership number, not the number of partners, same membership number, whoever the 1st July by 3 partners having different membership number, same membership number should continue up to 1st December. Same membership number, not the number of partners, This is the importance of the cut-off dates. And if anybody having some doubt, after 1st December, if any changes happening, what will happen? Then if you see that in appointment of bank audit, the banks will usually send to the firms any changes happened between the cutoff dates. Then somebody is mentioning the changes, some may not be mentioned. But this is the cutoff dates importance. So we should keep these dates, and members may have a doubt when is the best time for changes for any empanelment. The best best time changes in the firm 1st December to 1st December, after means the 1st July 1st December to 1st, between that we can make the changes. That is the member has to catch. This is the most important for this cutoff dates. And the panel speaker has said that exclusive associate members, yes, it's very important one. The Prasanna Kumar sir also told that the exclusive associates means should occupy only one position. When the member or partner having more than one positions, maybe partner and the proprietor, sole practice, the membership number, it is not a valid for MEF purpose. While submitting the MEF, then the software will see that this membership will be deleted, and based on the rest of membership, based on the establishment date, category will be allotted. So simply you can remember that the member more than one occupation is not a invalid membership for MEF purpose. This is the exclusive associate means. And next, as Prasanna sir said, cooling period and cooling places. Yes, absolutely, as it done from 23 March onwards. But it is, as he said, it's need to seriously restore the cooling places and the cooling period. It's a seriously required. But because of this not restoring, the members are practicing from the other than metro cities, they are losing the bank audits. So it's a seriously required. But I observed that the cooling places in south part, if you go for Hyderabad, Bangalore, Chennai, Coimbatore, Kochi, like that, it's there, maybe one or two places also there. But member has to consider, catch that, what is the boundary of Hyderabad, Bangalore, and the Chennai? So tomorrow, if the RBI announced that Coimbatore is the cooling period, how would keep that limit, the boundary? So somebody, the member, maybe if the certain pin codes having the cooling places, then they are going to just away for that. Then they are keeping that address. It is coming under the non-cooling places. So this, especially Prasanna sir, you should keep this, the limitation, maybe number of kilometers from the respective city, maybe 100 or 200, 150. Otherwise, even that declare the cooling places also, purpose will not be solved to the members. The other one, Prasanna sir, you need to address the members, especially on the income tax returns with the MEF requirements, because different partners having the different incomes. And after submitting the individual income tax returns, the MEF software or the MEF PDC is saying that this is the partner is not considered exclusive associates based on the income tax returns. So this is the one problem, sir. You need that elaborate on this point so that members will consider while filing the income tax return, at least for current year or the coming years. The other points also I need to address. As the law from 23 March onwards, no individuals members are eligible for the bank audit. So most of the individuals have converted into the proprietary concerns. But my suggestion is who having still the sole practice, let establish a proprietary concern merge the sole practice into the proprietary concern so that this new proprietary concern will be treated as a senior firm, like whenever you got that COP date, will become the date of establishment of the new firm, new proprietary concern. So we will get that whole seniority. Few of the members I saw that they are not merging, they are establishing proprietary concern, but not merging this whole practice into the proprietary concern. Seriously required, even though both are the within the one hand, but is required to merge. And most other points as covered by the other speakers. Let we will have that one interactive section. We'll solve that whatever the doubts raised by the members. That's it from my side. Thank you. Thank you.
Thank you, Masthan Garu, for sharing your views. So there are some queries which have come in terms of Google Form, which we have circulated to members. Maybe I'll start with the queries on bank audit. One member asked probably the reason why non-allotment of statutory audits of for the proprietary firms, and CA Prasanna Garu rightly mentioned. Rightly mentioned the criteria and the category on which the allotments will happen. Another member asked, what is the percentage of coverage for bank branch audit? I think already it was discussed and decided it is 70%, I believe. But as again it was mentioned, the reason for the branch auditors also, the central auditors are also asking for a better increase. So maybe I would request Prasanna Garu to share his views further on this topic of percentage of coverage of bank audit.
Shall I answer these two questions now? Or?
Yes, sir. Yes, sir.
Okay. The first point is that proprietary concerns are not getting allotment of bank branch audit. See, out of the 13,000 I told you, 13,000 firms are conducting the bank branch audit. How many are proprietors? All proprietary concerns fall under the category of category 4. There are 6,000 firms which have been given bank branch audit. Out of 13,000, more or less 50% of audits are going to proprietary concerns only. And you know, for category 1, category 2, category 3 put together, they come to 50%. So this is the present status, and there's no way, there's no board that they should not be appointed. The only thing is, suppose you take category 1. Category 1, there are 2,600 firms are there. Category 1, top category, 2,600. Out of that, how many firms have got it? It's not that category 1, all the firms are getting the audit. No, not at all. Including our own firm, we did not get it last year, for example. So out of 2,600, only 1,326 firms got it. That means 50% category 1 of they did not get the bank audit. So is the case with category 2, 50% they did not get the bank audit. So is the case with category 3 also, 50% they did not, more or less it's all 50% everywhere. So probably it may be 40% in the case of proprietary concerns. So this is how it has come. There's no bar for that at all. They are getting it. They will continue to get in future also. This is one point. The second point is regarding coverage. I've already spoken about coverage of audit. The 70% more or less every bank is covering. And in fact, we had a meeting very recently in Mumbai with all the CFOs and CA directors in all the, not only public sector, even the large private sector banks also. We also made it very clear that, you know, it should not go below 75% sale. That 75% there's a criteria that for SEBI, for the purpose of consolidation, if the subsidies are audited by somebody, you want to incorporate that for consolidation purposes, the 75% coverage should be there. That's what some SEBI guidance is there. Taking cue from that, we have told everyone that you insist that at least 75% coverage should be there. That's not directly related with this audit, but however, we have taken some criteria so that, you know, SEBI guideline will go well with the RBI also. Not RBI, with the respective banks. This is what we have done. As of now, there's no concern as far as 70% is concerned. Yeah. Over to Gelli.
Yes, sir. So one more member asked, criteria for empanelment should be based on knowledge of banking, CBS internal controls, systems internal controls, allied banking laws, and not just the number of years of practice. and number of partners. Bank audit should not be Mahatma Gandhi Enrega scheme for rehabilitating CNS. They should be more stringent way of appointment like interviews, etc. So this is one member's view. So that's
See,
so
conducting to make this empanelment itself is so difficult. There's so many issues. When as a member, when I make an application, I think what is so great for the professional development committee, when more rate they can make the criteria and give it. Why they're taking delayed and all? Why there's so much of delay and all that? But there are so many issues come up. I'm not telling our members also when they're making applications, somebody makes some mistake somewhere, he understands something, he misunderstands something else like that. So I'm audible?
yes, sir. Yes, sir.
Yeah, okay. Because something is displayed on screen. I got a doubt, that's why.
Yeah, technical team, please address this.
Oh, yeah, now it is okay. So that is the reason why, I don't think this is going to be in the future. I don't think much to say in this point.
So another member has written a query saying proprietary firm can get empanelment in coming years as per last 4 year as per last 4 years in panel. This year does not get audit due to new policy. Please clarify.
If they completed 4 years, as and when they get the eligibility, they'll be considered. But if 4 years not completed, whenever they get the eligibility, the balance part of the 4 years will be given to them.
Right. You very clearly mentioned that. So I think that query should be clarified by this.
That also, there are some members writing that SMP is what will happen. Institute is doing the best possible wherever it is possible, We're going talking to regulators. This is also one of the things we have done it by talking to Reserve Bank of India. They consider a request in this manner also. Over to you.
Another query was, what is the eligibility for a second year continuing bank branch auditor? This also, I think you covered very clearly.
Yeah, category 1 to 4, same criteria. If you're eligible, you get the audit.
Right. So next query is, every bank is asking for previous experience for concurrent audit of empanelment. How can a newly formed firm will get our audit? Our firm is a category 3, but does not get allotted for any bank branch audit.
Actually, as far as statutory branch audit is concerned, Naresh, so that is Reserve Bank of India guidelines are there. The concurrent audit is nothing but the internal audit. That is the management function. Different managements take a different decision. There are some of the managements, as you know, so they have taken concurrent audit independent of the bank branch audit. Some of the banks said, unless you are eligible, one of the categories, category 1, 2, 3, 4, unless you're eligible for bank branch audit, you'll not be able to do our internal concurrent audit. Some banks said you should have UCN. UCN is enough whether you got a bank, whether you're eligible for bank audit or not. If you get a UCN is enough, they're doing it. And some banks are telling that you should have qualified the post-qualification course of the institute that are on concurrent audit of the banks, that you should have qualified, at least 1 or 2 quarters, as the case may be, should be qualified that post-qualification course. Some banks are telling you should have minimum 1 DSAR, CSAR, as the case may be. There are different banks have different criteria. So they're very difficult to bring them on par. But however, we made a beginning in the last year itself. I know we went to IBA, we had a discussion with them, Indian Bankers Association, and also with the management audit team. We had a discussion so that we have seen all the, not only the 12 public sector banks, but also some of the good private sector banks who are collecting the data and frame one common criteria, that is scope of work. What is the scope of work of each for the concurrent auditors of banks, branches? That we have brought in. And what is the eligibility criteria of different banks? Among the public sector banks, so different banks have different eligibility criteria. Private sector bank, they've got different eligibility criteria. We collected the entire data and brought in one particular platform regarding 2 things. One is eligibility criteria. Second is about the scope of the work. Third is about the fees parity. Some banks for similar work, they're paying 50,000 rupees per month. Some banks are giving 25,000 rupees per month. There is wide variation is there. Considering all these things, we have collected the entire data. Now, very recently, it has come to some shape after a great study. Now, the Professional Development Committee, the chairman is Mangesh Kanare from Mumbai. So, he's the former chairman of WRC. So, he has taken interest now. But that we are calling for, we're going to have a meeting of all the heads of the Department of Management Audit or the internal audit, concurrent audit, whatever the name it is there, all the heads, along with the audit committee chairman of the respective banks, all the banks have got chartered accountant as audit committee chairman, chartered accountant director. So all of them put together, we want to have a residential course where we want to make great presentation about these three aspects: eligibility criteria, fees, and also the scope of the work to standardize. In fact, we are some of the areas where something is lacking. We have done a lot of work into that one, and their presentation was made. Something down the line should happen. Something should go well, so that it is common, uniform amongst the at least public sector banks. Vote.
Yeah. There was a couple of questions which you have addressed while you are making your presentation, sir. So I'm not repeating those questions. One question from a member with reference to CAG query. My firm has been allotted CAG audit for since 25 years. This year they did not empanel us, stating that my partner's remuneration is below a minimum of 3.6 lakhs. How can this be justified? Niranjan.
Yeah.
That's a tough question to answer because the criteria is very much set by CAG in their website. And once we log in, the first thing we are supposed to do is whether we are fitting into the criteria. So I think I have shared my version on what is the criteria like for a FCA and for an ACA. If it is a metro, we have got 6 lakhs and 3,60,000. And for other cities, we have got 3,60,000 and 2,40,000 as a minimum remuneration. I think continuing with the clue from Prasanna sir, I could say that, they have their, working done for the empanelment, and they observed that, this should be the minimum scale of drawing in case of a chartered accountant practicing in certain areas. So if the CAG has defined something, and while, applying, we have read through it and we have agreed to it, I think that's the way it is. We have no choice but to go ahead with it. And I think considering the number shared by Prasanna sir, like so many firms are empaneled out of 1 lakh firms, 96,000 odd firms. I think fairly that's the criteria being set up. I think we will tell our member that irrespective of that numbers, if you are not being given an audit last year, you should ensure that this March, at least the allocation is proper, so that your existing experience also carries over, and next time you get the benefit of it. That's from my side. Over to you, sir.
Yes. Sir. I request member N.R. Thirumal to please mute your link, please. So another query is, in my opinion, the firm does not violate any of the guidelines by CAG, and change in partnership cannot be ground for removal from the panel after being on the panel for more than 25 years consistently. So basically, that was a death of a partner, full-time COP holder, and after submission of CAG empanelment, and they've reported the death of the partner, and also replaced the partner, full-time partner. That was a genuine ground. Is what is the members' query?
See, again, I think it will be very difficult to answer exactly, but I could explain the provisions. Like the moment we apply for it, we get a chance to look at empanelment status maybe after a month or so. And then if at all there is a grievance, there is a email ID and contact number provided where we can communicate. Now, what must have happened, I could guess probably is that the old partner with the association of that criteria of 5 to 10% and 10% above, 10 years above, one of them would not have been fulfilled, and the new person who is joining may not have completed one complete year, one calendar year, and once it is not done, obviously for this particular intervening period, the firm may have a problem. But again, for them also, my suggestion would be you hold on to the same numbers for the next empanelment, and your experience would be restored. So if the criteria says so, then I think we can't really do anything in it.
Yes, sir. So another query, maybe I request Cotha sir to address this. Kindly explain the logic and reason regarding the yes or no option in MOC, giving the previous statutory branch audit in the MEF format while filling the current year form.
What is that? Yes or no criteria? What is? I
No, no,
didn't get
in the
what you are-
empanelment, MEF empanelment form, it is asking whether previous year you had given MOC or not is a question that it's asking.
Okay. See, MOC is like where memorandum of changes. Whenever branches means ICAI goes for this particular RBI, the banks will have one question, pertinent question. What is the benefit of this branch audit? We keep representing and we'll saying what are the things that we have done, what are the MOCs that we have given during the branch audit. So to ensure that the audits have been done properly and we have given a lot of MOCs, this is one of the criteria we thought we will include in this empanelment form, where any member has raised any MOC that has to be captured in the UDIN. In fact, we as a research committee, we also thought we will have one study wherein the number of branches which was not under audit, how much was NPA in that branches. So, but subsequently we couldn't do that exercise because we will not get that particular data. The data has to be given only by the bankers. So we cannot be as external people get the data. So we would just wanted to study that and say that these are number of branches where audit was not under audit, and this is the NPA. So we can definitely go and tell the bankers that what is the need and importance of bank audit. In that regard, we request all the members, whenever there is an MOC, please record that and update in the UDIN when once you generate the UDIN.
CA Meera Desai is wanting to ask a question. So can you please unmute and switch on your mic and the video also and ask a question, please?
Good evening, sir.
Good evening, madam.
सर मेरा प्रोप्राइटरी कंसर्न है और मैं मतलब मेरा बहुत छोटा ऑडिट का वर्क है और स्टैट्यूटरी ऑडिट मेरे को मिलता है बैंक का, तो मुझे भी पीयर रिव्यू करवाना पड़ेगा?
You are in practice for how many years, madam?
25 years.
But a proprietary firm, isn't it?
Yeah.
Okay.
From last 2 years I am getting statutory audit.
Okay.
Or my income is roughly 5 lakhs, 6 lakhs. Bank audit and everything.
Yeah. So may I request CA Masthan Garu to please address?
Madam is asking regarding peer review. I think peer review chairman Prasanna sir is the right person to address.
Yeah. Prasanna Garu.
Yeah. As far as peer review is concerned, anybody, irrespective of the income criteria, your gross income will be 5 lakhs or 10 lakhs or whatever it is. So to be eligible for conduct a bank branch audit, you should get peer review before 31st March 2025. That's the criteria.
31st March.
March 25. Yeah.
25. Okay.
Yeah,
okay.
yeah.
For this year, I am not eligible.
If you don't get audited, if you don't get peer review, you'll not be able to conduct audit. If you get peer review before 31st March 25, you are eligible to get audit.
Okay, but we have to file MEF before that, na?
No, not required. Not. MEF will be given, but at the time of getting the appointment, to accept the appointment and to conduct the audit to sign, that period you should have peer review. By then you should have it, because
Okay.
MEF happens much before that.
Okay, then it will come in the August or September, I think.
Yeah, August 22nd. Most likely August
Okay.
22nd, you'll have the MEF
Okay.
online.
Okay, but before 31st March 25, I have to do.
Yeah,
Right?
yeah, you should have valid certificate.
Okay, thank you very much, sir.
Thank you.
Thank you.
And
madam.
with the permission of Naresh,
sir.
I just one ancillary query also answer. Yeah,
Will you share your number?
my number, madam,
Yeah,
98481
98481
92636.
92636, right?
Yes, madam.
98481 92636.
Yes.
Okay, thank you very much, sir.
Thank you, madam. So, Naresh, with your permission, I'll
Yes,
just
sir.
answer another answer query. There's a lot.
Yeah,
This is in the minds of everyone. See, if everyone heard that if you want to conduct an audit of a listed company, listed as per the SEBI guidelines and also as per Reserve Bank of India, ICAI guidelines, you should have peer reviewed form to be
Correct.
eligible to conduct a peer audit. That everyone understands. And also
Yeah.
another criteria is there, where 1,000 crores turnover or 500 crores paid up capital and 500 crores or loans, either for public, banks or financial institutions. If you want to conduct audit, the auditor should be peer review. That also people understand. So
Correct.
when such big audits are there, and 5 partners above, okay, but if they are to get peer review, there's no problem at all. There's a merit.
Correct.
I'm a small proprietor where my income is 20 lakhs, 30 lakhs, or 5 lakhs, 6 lakhs, that category, and I am doing a bank branch audit, and why I should get peer review? Is there a meaning for that? Yeah, I'm not doing anything beyond that. I'm just doing small tax audit, and also one bank branch audit. I may get, I may not get. So why should I get it done is the question. This is in the minds of many people. At least 80% of charters have this in their mind. Friends, I'll just tell you, see, SEBI, much before ICAI brought the peer review guidelines, that that peer review rollout, we call it rollout, phase 1, phase 2, phase 3, and phase 4. This is a rollout, which is given by ICAI. That came the first phase. The listed company audits was made compulsory. The audit peer review is made compulsory with effect from 1st April 2022. Whereas SEBI guideline came with effect from 1st April 2010. 12 years before that. Okay, SEBI guideline came. Now, just Naresh, so my battery getting discharged. I'll just connect the wire. In the meanwhile, you can ask somebody to.
Sure.
I'll just get it connected and again continue this particular.
Sure.
Yeah. It's almost getting over.
Right. Now, there was one more member who was raising his hand. Anyway, so 1 second, at the chat box, there were a couple of questions. I've just. Mr. Balaji, CA Balaji, please ask your query. You are muted, sir. Still not, mic is not on. Not audible.
Balaji, sir, I think you are having problem in your mic.
Not my mic, sir. CA Balaji mic is not
Yeah, sir. CA
active.
Balaji mic's only problem.
Yeah.
He already unmuted, but he couldn't speak.
Correct.
Okay, in the meanwhile, I'll just finish this work. This item.
Yes, sir.
Yeah. So now the SEBI came with a guideline that listed companies should be audited. Then next question was that whether only the central statutory auditors should get peer review or the branch auditors also. This was the question. It is there for quite some time. Somehow, though the perfect interpretation was not there, informally SEBI has been discussing this with ICAI. Always it has been represented before them that these are small firms, category 4, proprietary concern, having their income 10, 20, 30 lakhs like that. In that category, why should they burden them with a peer review? This was how it has been going on. A time has come where it has been pointed out that if you read the first paragraph in the audit report of any bank, you see the first paragraph, any bank audit report, include private, public sector, everything, they'll make a mention. This particular branch has got 5,000 branches, out of which 3,000 branches covering so much of advances and so much of business have been audited by branch auditors. And we have audited 20 branches, balance branches not audited with a coverage with so much of advances and business. This is what is mentioned in the first paragraph. That means the opinion given by the statutory central auditor on the accounts of the bank depends upon the major part, depends upon the audit conducted by the branch auditors. When SEBI has got guidance with effect from 1/4/2010 that they should peer reviewed, when they are depending so much on the branch auditors, is it not required that the branch auditors should also peer reviewed or not? This is how the question has come. Suppose all of a sudden they come and insist that we want this to be done, we will be in doldrums. That time the same membership will say that it has not been brought to our knowledge. That is the reason, though informally it has been happening, not in writing, we have told them that we are going to implement that one. That's how the entire thing has come. We already told them that with effect from 31st March 2025, bank branch auditors will be peer reviewed. Because all the toll banks, this is not applicable for the private sector banks. No, it's applicable only for public sector banks. It's very clear. Because all the 12 public sector banks are listed companies. They're all listed on the stock exchange. Thereby, this is required. That is the background. it was never the intention of ICAI or the Central Council to put this burden or whatever you call it, what is the English you use it, to see that, all this category 4 or category 2 or 3, as the case may be, it should come under bank, peer review purview of all. I think I made the point clear. It's not done out of compulsion, out of regulation, not by choice. Thank you. Over to you.
Yes, sir. Thank you, sir. So can I request Deepa Dinesh Kumar to please unmute and switch on your mic and ask your question, please?
Yes, sir. Thank you. Good evening, everyone. Sir, I have a question. In recent months, some of our partners have been retired, and new partners have been entered into the firm. So, in this case, next year, if we apply the CAG, how come the points will be allocated, sir? Based on the new partners, or based on, because the all data which we provided in the website related to the business income or allocation, everything it's based on the existing year partners.
How old is your firm, madam? How many partners and how many years is the firm is
47 years. Yeah, 47 years old firm, sir.
Okay. How many
partners?
partners?
Eight partners, sir. Currently.
8 partners. Okay. So how many partners have retired?
4 partners have been retired, and another 3 partners have been entered into the firm.
Okay. So the existing those partners who retained, who continued, how many years of association with the firm, each of them?
They was in our firm, sir. They again added this year. They have all our FCAs.
Correct.
Yeah.
No. My point is, out of 4 partners left the firm. Balance 4 of them is there, isn't it?
Yeah, they are resident.
So how many years they've been associated with the firm? That's my question.
They have been associated more than 27 years, sir.
Okay. So you're looking from bank audit or CAG audit, madam?
Both, sir.
Both. Okay. So Niranjan, please, can you address it?
Yes, very much. The point is, like, madam, you will have to look at the new partners when they are entering into your firm. They will be considered only when they complete 1 calendar year. So they will be considered as partners from the completion of 12th month. So in your case, I don't think so that new additional partners would get some credit in this year, but next year only they will be considered. And for those partners who have retired during the year, also you will not get credit during this year, because on the date of reporting, that is 1st January, they may not be partners. Now, coming to your question on how to present their income. So you would appreciate that in that particular form, you would have to write separately about partners joining during the year, and their computation of income would be given separately, and it would not be going through the conditions of, that 1%, 3%, or 4% criteria of total compensation. Now, coming to the eligibility criteria, again, if your remaining partners, I think that's the point Naresh Gelli sir was trying to ask you, that how many continuing partners you have who have the criteria of whether they are continuing with your firm for 5 to 10 years or 10 years plus, and then that will be defining whether your firm would continue to remain in the panel and you would continue to get the audit or not. So I would request you to go through the 24-25 guidelines which are there available on the website of CAG, and I think you will map your firm in those respective parameters, and then I think you will get the answer correctly.
Okay, sir. Another question. Some of the newly added partner is having a CA, say the concurrent audit certificate and CISA, everything. So we will not going to get any points for that qualification. Is my understanding?
Yes, after completion of 1 calendar year on that reporting date, you will get all the credit.
Noted, sir. Thank you so much.
Yes.
So can I also request here Ranjit KK to please unmute and switch on your camera and
Thank you very much, sir. My name is Ranjit. and I've been practicing for 27 years. It's been a proprietary firm, and I've been closely listening to the learned speakers here talk about CAG audits and bank audits. From the very beginning, from 1995, I've been getting CAG audits and bank audits. It's only in the past 2 years that I've been unable to empanel for both these categories. Now, since this is a proprietary firm, we get small CAG companies and banks and all that. Regarding CAG companies, most of the time we have to, we are left with companies which have absolutely no systems or procedures or anything like that, and it is, it's a terrible job at the lowest level. In the case of banks, whatever banks we have got, looking at the first 10 or 20 large advances itself, the manager will be, like catching my feet and saying, sir, please don't do that. The other bank is competing. So the manager there is in charge of marketing their products as also having to regulate it. So actually, when they, they're like, there are, even though there are multiple infractions of the, rules and regulations, we are unable to comment on every one of that because, there are so many at the branch level itself. So I'm talking about the small branches and small companies and the type of challenges that small practitioners face. So most of the big firms don't have to, face any of these problems. So we face all these. We have been facing all these problems for all these years, and now all of a sudden, that has been cut out of our. Most of the time I do it not for the money, but for CAG audits and all. Who does it for the money? I don't know. But this is the current situation. I don't know why it has evolved so fast into something which is, within 2 years. Why has it gone from, something it was not there before to, big firms and all that. And as far as, and as far as, if we look into the LFAs of previous auditors, most of the time I see, it's very rare that I see any serious opinion written in LFAs. Most are yes, no, not applicable. So that is pathetic. It's be it regarding systems or procedures, or there are multiple matters are asked in the LFA. The quality of audit is too poor. So I don't know how no, even if a large firm is given 80 branches of one bank to conduct, I don't know how they manage to get to the bottom of anything there.
You have to unmute and speak. Naresh, please unmute yourself and then speak. You are muted.
Yeah. So, see, Ranjit, broadly what I see, what I understand is, in terms of the quality, that the purpose of the institute is pushing in terms of all these peer review and all those additional things which we are trying to get is to improve the quality of the audit. And in turn, the quality will reflect as you do probably do a serious audit. And there is no question of charity while doing audit. We may have to qualify, please qualify. There is no question of if you qualify, the CAG will not allow you, is not a criteria there. You are doing a professional job, and I would suggest there should not be any discount if you are not convinced or not satisfied with the process of audit. And if the documentation is poor or the process is poor, the classification is poor, there is no discount at all. So you have to be very professional. And probably in terms of the fees part, if it's a CAG audit, I think the institute is pursuing the CAG to increase the fees. But in terms of other things, other clients, or as you said, probably banks also is fixed by the RBI. So the institute is again pursuing them to increase the fees. But in terms of other audits or anything, please ensure that the minimum recommended fees is applied and you try to increase your fees to that extent. I would request CA Cotha Srinivas to add if you have any comments on this point, sir, so that the member who is not happy with terms of the type of quality of job, whether it's in terms of CAG, the documentation or the files they maintain or the bank audits, he is not very happy. So probably if you
No,
can
no.
share some
Like
points.
we have all the like methods of reporting. If you're not happy, definitely you can qualify the reports. But he's saying that if you do all these things, you will not get the audit. But that cannot be an excuse for a professional not.
Kotha, we're not able to hear you.
So actually, I
Maybe
think
he's offline.
I think
got
he
disconnected.
went
Sir.
out of the meeting due to
They're
network issue.
disconnected some reason.
Hello, sir, somebody has raised
You know, can we quickly take the questions which have been put in chat box?
Yeah,
I noted some of the questions.
Correct. Yeah, there is one.
Naresh, if you permit me, I got some 4 or 5 questions. I have noted down. I've seen the entire chat box.
Okay.
So I'll just take up. If I miss anything, you can just tell. Because time is up, you know. So that quickly, I just want to take. Not that, you know, you want to come in your way. Yeah.
Right.
Yeah, the first question is regarding peer review. The many questions have been put. That's a very costly thing for SMPs. Actually, the fees is, you know, for SMPs, up to 10 lakhs rupees income, it is 15,000 rupees for a period of 3 years. The validity of the certificate for a period of 3 years, thereby, every year there will be a burden of 5,000 rupees on the firm. So that is number one. Number two, if you see the other side, most of the SMPs are the peer reviewers. Not most, 90% SMPs, they are doing the peer review. Not somebody else is doing the peer review. Or large firms and senior chartered accountants, they are not doing the peer review at all. In fact, this is also a professional opportunity for them. So both the ways, if you look at that one, I did balances. I don't think, I do agree, it's a burden. But as I told you, you cannot expect a chartered accountant to do free of charges. Our own peer, when he's coming and doing the audit, we have to pay reasonable fees for them. That's why the fees has been fixed accordingly. The minimum fees is 15,000 rupees for a gross income up to 10 lakhs rupees, 10 to 20 lakhs rupees, 50 lakhs rupees, we got 20,000, then 40,000, 60,000 like that. So it accelerates up to 6 lakhs rupees. 30 crores and above is 6 lakhs rupees. So that is the one. But it's not, as I told you in the earlier explanation, it is not something ICAI has done it. They want you to comply with the law. Suppose somebody, proprietary concern, of course, proprietary concern, they will not be doing the audit of listed companies, and the proprietary concern is doing the audit of 1,000 crore turnover company or a unlisted company and 500 crores. This is not a small one. That particular, he can be subject to peer review. There's no issue at all. I think such a big auditor doing a 1,000 crore turnover client, so they can afford. The only question is bank branch audit. Not all, some of them, you know, like some member was expressing the total income 6 lakhs rupees, out of 3 or 4 lakhs is coming from bank audit. For such people, it may be there. But by virtue of operation of law, the guideline of the SEBI, we don't have choice. Out of compulsion, we've done that one. And the second thing is, and when there's no guarantee for the bank branch audit, so why should we get peer review? Because these two things are two parallel, different things. First, you should have the eligibility to conduct the audit, whether you get it or not. To be an auditor, you have to be chartered accountant. You have to pass the chartered accountancy. You may have knowledge like that, you know. It is slightly that extends to the situation where to be eligible, you have to have the qualification. Whether you get it or not, you do not know. If you get it, then you should be, unless you're eligible, you will not be able to do the audit. That's the issue there. And is there a cap? And you know, there's another question, is there a cap on the turnover? There's nothing. Even if your income is 10,000 rupees, if you want to get peer review, you have to pay the fees and get it done. Then the
Sir, sorry, my battery got over. That's why my connection got disconnected. I was answering one query. If you permit, I can just finish off that 1 or 2 minutes. Hello.
Yes, sir. Yes, sir.
Yeah.
Actually, 1 minute, sir. Let Prasanna sir complete, and then you can.
Okay, sir. Okay, sir. Okay. No, I just wanted to say that afterwards I can speak for 1 or 2 minutes. No problem.
Yeah. Sure.
Okay.
Yeah. Okay. Next one is concurrent audit. There's this one member, you know, Anil Kumar has raised that because I was not eligible for the bank branch audit, they are removed as a concurrent auditor. The concurrent audit was going on. Because some of the branches, as I told you earlier also, they got their own criteria for regarding the eligibility for conducting the concurrent audit. Probably that particular bank, probably is a Canara Bank. That's what is mentioned there. So they got a criteria. Unless you are eligible to conduct bank branch audit, you are not eligible to get the concurrent audit. That is only that bank. It's not that other banks are got it. I told in the earlier explanation also, what is this bank specific? However, we are trying to work out a formula, and we having a meeting with all the management audit heads and also the audit committee chairman to see that the uniformity is brought there. The second thing is, now they are 2 to 3, each audit firm is getting 2 to 3 branches. Why not to make it 1 branch? In fact, when now it is 2, not 3. 3 was the earlier criteria. Maximum number of branches per audit firm was 3. That has been brought down to 2 now. So the member is suggesting why not to make it 1, but to bring it to 3 to 2 itself took a lot of time. So they are very happy that the banks are happy to deal with less number of auditors. So suppose they make it 2, the number of auditors will go by 1/3. They are telling we're handling so much of auditor, dealing with them is difficult for us in a record period of time. And when the auditor is capable of doing the audit within the 15-day 3 branch, what is our problem? The auditor's problem. No auditor is rejected except 1 or 2 in the entire bank. That with 15 days is not enough for us. We will not be able to do 3 branches. Every auditor has done it, and they are doing a quality audit. Under those circumstances, we will not reduce it. Somehow we convince them, and we are seeing a lot of technical matters, non-technical matters, everything we brought before the knowledge of the Reserve Bank of India. Thereby, in the 8th March circular, it has been brought down to 2. So, however, this also took up. Why not do 1 audit? Like the member has suggested, we also taken up it. Reserve Bank of India did not like it because this criteria has come only 1 year ago, 1 year old. Let us wait for 1 or 2 years. Then we can take up this matter also before Reserve Bank of India. Then UCN, why change when the individual is converted to proprietary concern? Why UCN could not continue? A member for information, of course, this item is very well known to Masthan. Masthan's heart beats always for the bank audit. And whatever the new criteria that you have in the empanelment, most of the things have been given. The idea was given by Masthan. We have jotted down the entire thing and made a presentation to Reserve Bank of India on some changes at the institute level also brought in. One of the things is this one, UCN, if you are an individual practitioner, convert into proprietary concern, your UCN will follow you. If you convert that proprietary concern into a partnership form, still we are giving the UCN to be continued. There's some technical issue with that also we are getting resolved. So the same UCN will follow you. Okay, the individual to proprietor partnership form. There's no issue. Why CAG interested in peer review? This is the first question. The peer review, so one side, so you see, individuals and proprietors, except in some parts of the country, they are not getting C&H audits at all. So others who are getting it, others also is not compulsory. Peer review is not compulsory for getting the audit, but only for scoring it is required. As Niranjan Joshi has rightly explained, earlier the criteria was only quantitative aspects. Number of partners, number of branches, whatever it is, number of paid charters, only that. But the Reserve Bank of CNH thought the quality also should be evaluated. That is the buzzword. Quality is the buzzword today. To get that one, they are considered not only the peer review, which is a quality standard, the quality evaluation is done peer review, and also they also consider qualification, post-qualification. What specialization somebody has got, they won't recognize that because they feel that post-qualification courses ensure more knowledge and more quality also. Similarly, that the days are not far before they get the AQM also. Audit quality maturity model, they're also studying. That's what I heard. I don't have any record on my hand. I understand they are studying AQM also, so that that also should be considered. These are the quality factors which need to be considered for the purpose. Like any bank or any institution or any entity, they've got a ranking. The credit rating, all those things, AA, BB, BB plus, all those things are there. There's no such criteria for chartered accountants and the service professionals. These are the criteria they have brought in. And one side, you just look at a different angle. When we have got a peer review system, as some regulator like charter, Control Audit General of India recognizes that, and they give 25 marks for that. The maximum marks, the partners is not 25. Like Niranjan Joshi said, is not 25, less than that one. Even for the paid employees, less than that one. They are giving value for the quality standards which are reviewed by our own peers. I think the other side is we should be happy that somebody is recognizing our system of peer review. I'm just telling for the information of the members. And then why the fees is why they are interested in peer review, why they are not interested in the fees. Dear members, the fees paid by CNDG in most of the cases or many of the cases is low compared to our own private sector clients. They are not aware. They are thinking that is they are paying very huge fees like that. We made a representation in the year 2022 to Honorable CNDG that, we have compared the sector-wise, we have taken the fees paid by CND, the public sector undertakings, and all vis-a-vis, private sector undertakings in our country. They realize that the fees that is paid is far low, far below compared to private sector fees. Number one. Number two, compared to the amount of effort they are putting in, amount of time they are contributing, they realize that one, they formed a subgroup. A group has been formed with a representative of public sector undertakings, with a representative of Ministry of Corporate Affairs, another Department of Public Enterprises that has been formed. There's some difficulty for us to get the nominations from the respective government departments. It took almost 1 year for us, in spite of better follow-up. Recently, we got all the nominations. The first meeting was held, 1 month ago. This meeting will continue. When the group recommends, and they want a concrete system, so that fees should be remunerative, number one. Number two, there should be level playing field. It should be at par with the private sector. That is coming. It may take some time to bring the modalities. There's already been delay of 1 year, as I explained to you, and I think another 6 months or 7 months to go. At least for the audit year 25-26, a new fee structure will become. That already the Professional Development Committee is doing a lot of work in this one. And another point, UDIN were mentioned lakhs and crores there in words you are writing. What is going to happen? How they are, CND is comparing this amount. CND is not comparing the amounts with UDIN. They are only comparing whether UDIN has been generated on the proper head or not. That's the limited purpose they are doing it. They don't take what is written there. However, now we're changing the UDIN also. I don't know whether it's implemented or not. Now this alphanumeric fields are removed. We're making numeric number one. All fields will be numeric. Number two, it will be absolute number. No lakhs, no crores, no decimals. It will be absolute number that is being implemented. Once that is implemented, automatic data can be captured from there. And the next one is the merger is the small point. And there's one good point raised by A. Venugopal Reddy, asking the minimum, what is the minimum marks required for getting a CNDG empanelment or the audit. So I'm not aware. However, we find Niranjan Joshi, he knows, he can tell, but I'm not aware what is the minimum marks. And the concurrent audit, there are some North Indians are given in the South India. What is happening? Somebody is giving 80 audits were given. This happened, my dear friends. This happened only in one case, that is Bank of Baroda. Bank of Baroda, in spite of a lot of representations made by the institute, long ago, way back in 2017 or 18, but still they want a cluster concept. A cluster of banks, 40, 50, 60 branches were given to a single auditor. They used to manage all the concurrent audits. Thereby, when there's a criteria laid down for eligibility, some North Indian audits were being South India also, it has happened in the past. But for information, my dear members, we have taken up this matter seriously at the very highest level. Last year, they decided to do away with that thing, and their this year appointments are made for individual chartered accountants. The cluster concept has been removed. And the fees also, as I understand, when we spoke to them last year, the fees was reasonably they are fixed compared to the rest of the banking, rest of the fees prevailing in banking industry. And the last point is MOC very nicely explained by Cotha Srinivas, and somebody has mentioned in the chat box that MOC cannot be considered as a criteria to ensure the quality of the audit. I 100% agree with the gentleman. So whoever is written with Vijay Kumar, memory goes well. With Vijay Kumar, he is right. He is not for the purpose of ensuring that quality can be displayed. Quality can be demonstrated by the volume of the MOC. Certainly not. There are so many banks with 35,000 crores. There's one branch where which were also audited, central auditors, but there will not be single MOC also there. That doesn't mean that we're not going to audit, because they're maintaining very sincere, very, very nicely, following all the standards. MOC cannot be there. But this is only for the purpose of, at the same time, we should understand there cannot be a situation, there will not be any MOC in the bank as a whole. Well, that's what Cotha Singh was explaining. Only for statistical purpose of doing, not for the purpose of quality evaluation. The last point was very beautifully Jitendra Babu. He has advised that a Form 1 for the peer review is a very lengthy one. Yes, in fact, I was in Varanasi today addressing 100 members who were undergoing a training to be the peer reviewer. There again they raised, but we are aware of this particular factor. We are conducting that one. That the entire 50 page will likely to come to 25 to 30 pages, and out of the 30 pages also, best part is going to be auto-filled from the SSP. This is a digital project has been taken up. Recently, we have given the work also to one agency who are developing the entire digital platform for peer review board, and start to finish, right from Form 1 application up to issue the certificate, include DigiLocker. Everything is digital now, but that will take another 3 to 4 months. You have to kindly bear with us for this particular period. So these are the things these are the things broadly, Naresh. These are the points raised in the chat box. I just jotted down and made a presentation. Thank you.
Sure.
Over to you again.
Yeah. So I request Cotha Srinivas to address that specific point which got.
Yeah. Sorry, there was like battery was out, so I couldn't complete that. As I was telling, definitely the quality has to be maintained. There is no second word about that. Not maintaining the quality as such. So wherever you feel that there are certain discrepancies, you can definitely qualify your report. You can emphasis of matter, whatever is required to be done. Definitely you can do it. The reason why I'm saying all these things is like we have come across various cases in the disciplinary. I'm also part of the disciplinary. I think Prasanna sir will also agree with me. So a lot of disciplinary cases we get complaints we get from the bankers and RBI. So initially, as you said, the bank managers will ask you to ignore certain things and get the works done as per their requirements. But subsequently, if that particular account goes bad or it becomes an NPA, the first thing they will do is they will raise a complaint against the concurrent auditor or the bank auditor, as the case may be. At that particular point of time, we will not have any answers or any reason. We cannot give any reasoning to the disciplinary committee as such. So we should be very, very careful the aftermath of what we are signing. So you have to do whatever is required. You have to follow all the required auditing standards, accounting standards while doing these assurance services. There is no way that you need not qualify what you are supposed to be qualified, what is required to be qualified. That has to be compulsorily done. So this is what I wanted to tell, sir, in that regard.
Thank you, sir. There is one member who raised the hand with the name TGAND. Can you please raise your query?
Good evening, sir. I am Gandhi here from T. Gandhi and Company. With regard to C&H empanelment, post-qualification marks restricted to 1.25 irrespective of the number of certificate courses. So it is not incentive to youngster to do more certificate courses. Whether I do one course or 5 course, the marks is the same 1.25. There should be weightage according to the number of certificate courses. Kindly we take it up with the C&H people. I did 5 courses and I'm in 38 years of practice and they give 1.25 only. Prasanna sir, kindly take it up with the C&AG people.
Yes, sir. In fact, we were talking about the cap also there. In fact, we made a representation that was not considered that time.
Okay, cap may be there. Okay.
Valid. We'll continue the same procedure in next year also. We'll do that. It's a good point. Okay. It's a valid point.
Very good. Fine. Thank you very much.
Yes, sir.
Sir, actually, one member who was trying to talk, CA Balaji, what he mentioned was their firm is a 40-year-old firm and they've been doing CAG audit with a turnover of 100 to 200 crores. But with the peer review being made compulsory for all the CAG audits, they've lost a lot of points and they're now getting a smaller assignments. But you have mentioned very clearly that the purpose of peer review and reasoning why the firms have to go for a peer review, you have very rightly mentioned. And I would suggest the CA Balaji to please get your firm peer reviewed for you to be eligible back to the norms and criteria being fulfilled. You'll be able to get the allotments properly. So if any other members are wanting to raise queries, please raise your hand. Otherwise, we would like to conclude the meeting since it's more than almost 2.5 hours since we started the session, please.
Say, Naresh, in chat box, last 2 questions were there. Can I answer in a minute?
Yeah, please, sir.
Yeah. So that's regarding peer review. Whether there's any extension for the phase 1 of the peer review date. Of course, phase 1 is already over. That is listed company. Now it's phase 2. I think he's mentioning was phase 2. The due date is the 30th of June. Tomorrow is the last day for 5 partners and above like that. So as far as phase 2 is concerned, it was extended multiple times. Number of times we extended. The last date was 31st March. We were told that time we were written to all the practice units that 31st March is last date. Still, they have not done it. Then we took up the matter in the council. We made a presentation in the council. Council was some council members who were all interested in getting the extension done. In fact, I only presented the agenda item. Wanted that. The president was feeling How many times you want to do extension? As a regulator, this should not become a regular feature. So I will not agree for the extension. We will do it a grace period. A grace period of up to 30th June was given. Because we asked him what is the grace period. They explained grace period cannot be extended. A due date, due date can be extended. Like that it was told. However, that there must be extension as of now. Because 30th tomorrow we don't have any agenda item as of now. Let us wait and see how the deliberations go in the council next month. And regarding eligibility to be a peer reviewer, you should have completed practice of 7 years. You should have held COP for the period of 7 years. So then you have to attend 1 day program, 6 hours program, conduct a peer review board with all the branches and regional courts who have got multiple times in this conduct physical program. You have to attend that one, then appear for examination. The examination, online examination, every alternate Friday, work at examination, every other alternate Friday, work at a mock test. You can appear for the mock test, it's not mandatory. You appear for the exam, very easy to pass the exam because all of us got enormous knowledge regarding quality of the audit. They speak about only quality of the audit. They speak about only the working papers. Any one of us will appear, will pass that one. Then you are a valid peer review. So with this, I think all questions have been covered in this one. So over to Naresh.
Regarding this income tax returns. Prasanna sir.
Yeah.
Regarding the tax returns of partners, sir, because so many.
Yeah. So I think Naresh, in fact, in chat box also some questions were there. I noted on somewhere. In chat box was regarding income tax, why you are taking the financial documents. We call it financial documents, where we take the income tax returns, where PDC takes a profit and loss account, income tax expenditure account, balance sheet, and schedules, everything is taken. What is the purpose? What we are going to do with that one? So members, this entire exercise started in the year 2019 for the only one reason, when we had a number of complaints from our own members that there are some chartered accountants who are into employment and they are making an application, they are got certificate of practice. They are making MEF and they are also getting bank audits. They don't do any other thing other than bank audit because they are into employment. How to prevent this one? So we tried a number of ways, but we could not find anything other than the income tax return. Then in 2020, so the professional development wanted this income tax return to be filed. So that time manually we were doing. That time we didn't have AI what we are having today, which was implemented last year. Prior to that, we used to manually verify some percentage of case only, not 100%. Though we took the documents from all of you, only a handful of 15 to 20% were picked up with some criteria, and they are manually verified by a group of chartered accountants firms in Delhi. When they verified, they found a number of chartered accountants who were having this, salary income, Section 192 TDS and all, and still they are eligible. They have conducted the audit also in the previous years. Then we raise a query. So how you are holding, certificate of practice while you are in employment? Queries have raised to everyone. None of them replied. So then they are made ineligible. Very next year, my dear friends, please understand, when the next year empanelment came in 2021-22, nearly 3,000 chartered accountants who are otherwise they are getting the eligibility and they are getting the audit. They did not even make an application. So our intention was a chartered accountant who has certificate of practice, genuinely carrying out that practice as a chartered accountant, only they should be eligible. Not these type of people should be eligible. That was the criteria which you have done. Fairly you achieved the entire thing. Coming to today's thing, there are a number of things, there are a number of anomalies we are finding, but now it is not a manual system. We have got the moment you file your MEF. So we run a program. We've got a beautiful program using artificial intelligence also. It will pick up all the cases where anomalies are there, where divergences are there. Then we'll raise the query to the individual member. And if the answer is satisfactory, we'll make them eligible. If the answer is not satisfactory and the violation is there, so we'll make them ineligible. That is the purpose for which it has been taken. Fairly, we have achieved a great things. There are some chartered accountants who are doing to business. Business is not permitted by the chartered accountants regulations. It's not automated route of approval. They are not eligible at all. But still, they are having business and also making application here. So that means they are violating the regulation of the ICAI regulation itself. So all those things, we raise the query, they are not giving reply. But institute also, I'm not going on record, but still, when number of divergences are more, lenient view was taken. They are made ineligible. There are some people. They are the managing director of a company, and for which they are also managing director drawing remuneration. But that they are showing in a different criteria. Those things also picked up some other cases from from the public domain also, and saw that they are made ineligible. And there some practical issues were also there with respect to some LLPs and all. So those things also were taken into consideration. They're made ineligible. And the main occupation is that one. Salary income is that also explained. The next thing is other sources. There are some of the chartered accountants, but knowingly or unknowingly, I'm not into any controversy here. So they are showing income from business, income from XYZ, income from other sources. A substantial income has been loaded in the other sources. Then the queries were raised. What is the source for this particular income? They are not in a position to explain, because part of the remuneration they got out of the general practice as a chartered accountant, that has been taken to income from other sources. When you raise the query, again they are caught. So that means they are not following the regulations. They are not following the regulation. When you are practicing as a partnership, and if you don't have permission to do an individual practice, they cannot do. They have to carry out the only as a partner only. They cannot do individual practice at all. That is the regulation. So those things have also come out. Thereby, such people are also made ineligible. So as I told you, the idea was to see that a genuine persons only they get this one. The major issue was with respect to income from intraday trading. By the intraday trading, as per the AIS of the income tax department, so it is shown under speculation business. Questions were raised to the members whether speculation business intraday was done or not. Intraday is treated as a business, and business should not be carried out by chartered accountant. So there also many charters have given some explanation. If the marginal thing were there, were ignored, were given them an advisory that don't try to continue to do like this. So that was also given. A lenient view was taken wherever genuine cases were there. There are some cases where the turnover is running with 1,000 crores, 1,500 crores. Such people have been taken for task and they are not made eligible. So these are the things coming out of this one. This is being done for the benefit of all the genuine chartered accountants. Just to weed out those who are not eligible, but otherwise they are eligible as per the records. So this is what Chandramastan, over to you.
On this, so most of the young members having the problems are on this, because the members, the filing the higher income to get that housing loan, to get that term insurance, get that housing. If you disclose that loan, the income's very low, they will not get the housing loan higher side, and they will not get the higher side the term insurance. So this one also you should think, sir.
Very difficult to answer. I know this problem. I am not that I'm not aware. These are all the offline matters, not online matters.
Let them show income, but in a proper this thing. If they are practicing, let them show the income under income from profession. Nobody will question that. Other sources only the question arises. And sir, regarding peer review, only one thing I'd like to mention with the permission of the convener of the peer review board.
Yeah.
Whatever peer review requirements are there, as he said, we have been further extended. Now it's only grace period that has been given. In all those cases, you have to see that the peer review certificate should be obtained before accepting an audit as such. So some query was there for which says that proprietor also is there to do the audit, statutory branch audit as on 1st of February 2025. Then when to get the peer review? My suggestion is don't wait till 31st of March 2025 to get your firm peer reviewed. Please apply now itself. And peer review, as the name itself says, it is a review by a peer. Peer means our fellow professionals. So need not worry too much about the peer review. Of course, there are certain issues with respect to the filling up the forms or whatever the requirements that, as Prasanna has said, it has been, we are looking into that. Definitely, we want to simplify that so that only purpose of peer review is to see that, ensure that quality is maintained. Quality is maintained consistently the particular practicing unit, which all of us have to do it. So there's no question of not following the audit qualities once we are doing assurance services. That's what I wanted to say with respect to the peer review. Please don't hesitate to get yourself peer reviewed. Kindly get it and keep it so that anytime if it is asked, you are ready with the peer review certificate. And some question was there, how much time it will take? Now, most of the deadlines are coming, like 1st of July 2024, then 1st of January 2025, then 1st of April 2025. Many firms are applying, many practicing unit. So there may be a delay of a month or so like that. So please see that you start applying for peer review, and the peer review board ICAI will ensure that all the peer reviews will be done as quickly as possible, and you will get a peer review certificate. Thank you, Naresh, sir.
Thank you, sir. I think we have
to
been
close.
in discussion for more than 2.5 hours. And I would like to thank the panelists, CA Niranjan Joshi ji from Mumbai, CA Cotha Srinivas Garu from Bangalore, CA Prasanna Kumar Garu from Vizag, and CA Masthan from Hyderabad. And all the participants, I would like to thank each one of you for being in the discussion, and especially the panelists for sharing their rich experience and clarifying all these doubts for the benefit of members and the profession. I would now request to Subbarao Garu for a formal vote of thanks, and we can conclude our meeting accordingly. Subbarao Garu, if you are there in the meeting. So I think he is left.
I think you already thanked, See,
Anyway,
Naresh, you have to only thank all the participants now.
Yeah. So I
There's
will
some
thank,
participants are still sitting in the meeting.
Thank
You thank them and we'll close the meeting.
Thank you, sir. So I thank all the members. Members also, I'm sure they have crossed 200 members for this session. Thank you very much for joining again, though it was a very short notice second time. First time there was a technical issue, I'm sorry. This time I think we are able to fulfill all the requirements and have an uninterrupted session for 2.5 hours, and a very good session. I'm very happy for the participation and also for the panelists. Thank you very much, sir. Thanks a lot.
Thank you very much,
Thank you,
sir.
sir.
Thank you.
Thank SIRC for this initiative, and
Thank you so much.
more particularly Naresh and Gelli for this initiative. Thank you.
Thank you, sir.
Yes, yes. But
Kindly share that PPT, sir. Kindly share the PPT with all the members, and for us also.
Sure.
Thank you, sir.
Thank you. Thank you.
So happy CA Day in advance to all the participants.
Yeah, happy CA Day.
I wish all of you participate in the CA run for tomorrow for Viksit Bharat.
Yeah.
Please participate in all the activities. Thank you.
Thank you.
Congratulations, Naresh, sir.
మీటింగ్ ఏమిది అయ్యో చాలా కష్టమా